All right, guys. We got the Fed meeting coming out in about an hour. We're going to put a timer up, get ready for it. Market did stay flat like we thought it would. Um, all right, chat. What's up, Preston? What's Wafif, AK, Biggie, Matthew, Free? What's up, chat? All right, we're here. We're early today. I know we're early. You can see Q's flat, Nvidia flat, Tesla flat. I told you guys this is what we would get. My equities portfolio is actually looking pretty green, so I'll take that. My guy K, hey, thanks so much. We appreciate it. Let's get the growth here. It's the FOMC meeting. It's the FOMC day, chat. I'm ready. All right. Yeah, I'm trying to see if I can buy some music to listen to on the stream that's a little bit different, so bear with me, chat. Because I'm listening to music in the background, so bear with me. We're going to get started a little bit. It's the beta. All right, shoot. All right, team. All right, so I can use some music. All right, what's up, Joseph, Matt, It's Bad, Ro, Bart, Akram, Scooter, Tribe, Milton, Wasif, Radical. All right, let me get some music going here. I got you guys. Hold on. Market is super flat here. Again, so we're gonna talk about what's going on today, the Fed meeting. Let me get a timer up on screen. I'm also gonna do a poll here. This Fed meeting starts in an hour and 10, or the actual decision starts in about an hour and 9.5 minutes, really. But we're gonna call it, yeah. So here's the timer. This is when it starts. We're gonna put this. We'll probably day trade a little bit actually leading into it. Here's Nvidia and Tesla. Here's the Nasdaq. Nasdaq's pretty flat, choppy leading into this. Here's the timer for when it starts. All right. Oof. Thank you for the donation, K, my guy. Thank you. Thank you. I'm from Louisiana. Go Tigers. You know, I'm from Louisiana. I live in Houston. See my Saints hat? I think it's probably what you see right there. Tesla green. Ooh. St. Charles Parish. Hey, what's up, Shizzy? Crystal's hot sauce. Meeting starts at 11 Pacific. I don't know Pacific time. It starts at 2 p.m. The meeting starts at 2:30 p.m. Eastern Standard Time. So they attacked AMC and GameStop down. So in my opinion, it's going to be positive news for the market. Yeah, I don't think there's much correlation there. You're doing a great job, brother. Bless you. Hey, thanks, man. So have you found out what got me sick? Was it pretzels or jujitsu? Probably both. You know, like realistically, it was probably jujitsu is my guess. You know, sorry. Wait, I had a drink. What is that my drink? No, that's not my drink. What did I do with my drink? Realistically, I'm sick. The rest of my family's not, and so the only place I've been that my family hasn't been is jujitsu. So it's probably jujitsu that got me sick. Then last CPI, PPI show increased inflation. No way they're raising rates though. Yeah, we're gonna pause and probably have a hawkish stance, in my opinion, is my guess here. But we don't know for sure. Yeah, we really don't know. My guess is a hawkish tone and a pause in rates. All right. GRPH potential squeeze. I would rather see them do hikes. Yeah, they're not going to do hikes. Yeah, sore throat, stuffy nose. More data, says JP. Be the same old, same old. Yeah, it's going to be... Yeah, I mean, I think we're going to have rate cuts in June. Here, let me do a poll. We haven't done one yet. Let me do one. All right, chat. We got the FOMC meeting today. All right, chat. We got the FOMC meeting today. Sorry for the echo. All right. So, when does the Fed cut rates? We got today as an option. If not today, it's gonna be May. If not May, it's gonna be June. If not June, it's gonna be July plus. What do you guys think? I think it's probably going to be June or July, but maybe later than that. It could be later than that. But there's the poll. Let me know what you guys think. Again, almost certain to be a cut. All right, chat. All right, again, we got Jerome Powell's the actual rate decision will most likely be a pause. That drops at 2 p.m. on the dot. And again, we'll cover it as soon as it happens. The full press conference will be streamed live here fully at 2:30 p.m. Sub to chat if you want. We're going to get that going live in a second here as well. So again, let's take a look. We got some stuff to look at. The first thing, here's the federal funds rate over time. All right, so again, if you don't know what this is, if it's your first time really watching the FOMC meetings and stuff like that, what today has to do with is today we hear from the Federal Reserve. Why the Federal Reserve is important is because the Federal Reserve's job is to balance our economy. If something happens macroeconomics wise and influences the market in a negative way to where recessions and depressions are at risk, the Fed has certain tools to try to help the economy. You know, the Federal Reserve, the Fed, they're going to have certain tools to help the economy. If the other side of that happens where inflation is too rampant, then they have other tools to help the economy. We can use 2008, the mortgage crisis, as an example. When 2008 happened, the Fed stepped in because of mortgages and the economy was at risk. Nobody was spending, and ultimately what happened is they stepped in and did what's called quantitative easing. This is basically them coming in, buying up a bunch of bonds, expanding their balance sheet. But what this does is it injects liquidity into the market. That's why it's sometimes referred to as money printing. And what this ultimately allows is the banks to lower interest rates to consumers. And when when consumers spend less in interest on car notes, on mortgages, on so forth, whatever interest you want to bring up as an example, they have more money to spend on other stuff. And when they have more money to spend on other stuff, they spend it, and thus it stimulates the economy. It increases spending. It's something that the Fed will do if we're at risks of like a recession or depression. And you can see that steep quantitative easing that happened in 2020 as well. We brought interest rates down to almost zero here. One of the consequences of 2020, and we did money printing we did stimulus checks, we did quantitative easing, we reduced the federal funds rate. The federal funds rate's the interest that banks charge each other to hold money overnight. Eventually, it'll trickle into everything else, though. And so lowering the federal funds rate will eventually lower interest rates to consumers and vice versa. Raising the federal funds rate will eventually raise interest to consumers. And so you can see in 2020, the economy was at risk. Fed kind of stepped in, lowered interest rates down to almost zero, and they kept them there until 2022. But again, and you can see that kind of them keeping interest rates pretty flat for 2 years or so. One of the consequences was inflation. During this period of time, inflation spiked to almost 9%. If you guys remember covering CPI, where it was almost freaking 9%, everybody was freaking out. Inflation was out of control. People were complaining. And that's one of the consequences of 2020 and the pandemic, where the Fed had to step in and save the economy, because when people have more money, they spend more money. And so if people are paying less in their mortgage and their car notes, they're going to have more money to spend on other stuff. Rolex prices doubled. Louis Vuitton CEO Bernard Arnault, now one of the richest dudes in the world because of so much inflation that happened over that period of time. And again, the Fed stepped in again and did the opposite of quantitative easing. They did what's called quantitative tightening. It wasn't direct QT. Most of the time it's just passive, which means that they just stopped buying up bonds and expanding their balance sheet. And then this happened, Then they started to, one of the other tools outside of quantitative tightening, Excuse me, man. I keep coughing. One of the other things they did, I should probably say, it's a better way to put it, is they raised the federal funds rate. So they've been raising rates. You can see they had been raising rates, and they did so from April of 2022 all the way to August of last year. They raised the federal funds rate. Interest rates now are what, 8%. If you want to buy a mortgage, you're going to be paying 7-8% right now if you want to buy a home. And, that's affecting real estate. Certainly, it's also affecting banks negatively because banks want to lend money. That's their business. If interest rates are really high, less people want to get loaned money. And so you can kind of see now that we've been there. We've been pausing interest rates since, July, October. I think it's August of last year. So since we've been pausing interest rates and we haven't been raising interest rates anymore, we're kind of in a neutral period of time. We're not cutting rates trying to bring interest rates down. We're not raising rates trying to keep interest rates high, because again, if interest rates are high, people stop spending, and that causes inflation to go down. If you put out a bunch of bubble gum and nobody buys it, what are you going to do? You're going to drop prices. Instead of charging 25 cents a piece, you're going to charge 15 cents a piece because nobody's freaking buying your product, and thus raising the federal funds rate eventually trickles into lower prices. That's the Fed's job. That's what the Fed does. Now, the question for this year is, when is the Fed going to pivot out of quantitative tightening and also start cutting rates? If you want to know when interest rates for mortgages, for car notes are going to start going down, look for the Fed to pivot out of the tightening period that it's been in. And again, what Jerome Powell said in the last Fed meeting was that it's probably going to be this year, next year, early next year, maybe. We don't know for sure. The Fed is intentionally very vague about this most of the time. They don't want you to know exactly when's going to happen. But yeah, that's what we're going to look for. So again, the big question now is, when does the Fed start cutting rates? Some people are expecting them to start making cuts as early as this month. I don't think so. I don't think we're going to cut rates this month. I don't think we're going to cut until at least June. And again, I think it would be a bad decision. Inflation's still a little sticky. Over the last month, the inflation data, the CPI data, PPI data, PCE data was all higher than expected. That's not a good thing. So inflation was worse than expected. It was higher, which might signal less of a desire for the Federal Reserve to start cutting rates and bringing those interest rates down because inflation pressures are still there. Now, again, it can't go on forever. The longer that a tightening phase goes on, the longer that the Fed is keeping interest rates high, the more likely we are to hit a depression or a recession, But we're not there yet. We're still worried about inflation more so, and the Fed's still being in a kind of a pause situation, which again, you can see they've been since August. And so again, that's what we're looking at today at 2 p.m. They're going to announce what their decision is, whether they're going to raise the federal funds rate, continue to pause the federal funds rate, which is the most likely thing, or start cutting the federal funds rate and bringing interest rates down. Different people, depending on their agendas, are going to want different things. I'm sure real estate professionals desperately want them to start cutting. People that are tired of paying high prices don't want them to start cutting. And so it depends on where you stand. Let me know in chat right now. Do you want them to start cutting rates? Do you think it's time to cut rates? Do you think it's too early? Like me, I think it's personally too early to start cutting rates. And I'm a freaking real estate agent. But it's too early. What do you guys think? Yeah, I agree. I think a cut's too early. I don't think it's an optimistic thing if we cut rates now. Well, I wouldn't call it bullish. It depends. It depends on what you want. If you're worried about inflation, it's not bullish. Ultimately, the market doesn't really care either way. The market's pumping up on tech and microchips and AI. And so, we'll see. Apple's up again today. That's nice. Tesla up to almost 173s. Amazon up. Gold is at 2160s. So, yeah, we'll see, chat. We'll see. It's time for the Fed meeting. You guys ready? Explain why when everything is so expensive. Inflation's roughly 3%. What you got to understand, and this is one of the unfortunate truths of economics, is that once prices go up, it's very rare that they'll go back down. Now we might slow the rise of them moving forward, or kind of get close to like pausing the rise of inflation, but it's very rare that they're going to go back down. So like if you're still upset about prices rising from the pandemic, bad news is prices are probably not going to go down. They're probably going to stay like that. Now we might sustain those prices for a longer period of time to compensate for the steep rise that we faced in 2020. but it's very unlikely that we're going to go down. When we say inflation is slowing or going down, what we really mean is it's slowing. Prices aren't going to go down. We're not going to have a negative inflation rate, unfortunately. So the best we can hope for is prices going up at around 2% annually. And right now, I think they're about 3%, 3.5%, depending on which metric you look at, whether you look at PCE, CPI, PPI, whatever one you want to look at. Right around 3.5% is where we're currently sitting. Depends on whether you're looking at core, which excludes food and energy prices as well. Food and energy prices are typically, they're volatile, fuel especially, and so taking those out of the mix and looking at the more standard prices, I think, is something that a lot of people do. But today we're looking at the regular, or when CPI drops, I'm usually looking at the regular price. I want to know what food and energy is doing, not exclude it. Yeah, and this is what I was trying to tell people. People trying to say we're in a recession now don't understand economics. They're just watching the news. The reality of it is, it's two different sides of a coin. Like, if inflation's bad, we're not in a recession. Those high prices being bad does not equal recession. Those high prices being bad equals inflation, too much spending, too much economic growth. The other side of that is a recession and depression, like somebody else is saying here. The only way prices go down is whether we hit a recession, and then the same people that are complaining about high prices are going to be complaining that, we're in a recession or depression, and that, they can't find a job or whatever it is. And so there's two sides of that. Like, there's two sides you have to look at. Right now, we're certainly not in a recession or depression. We're more so on the other end of that, where we've had too much job growth and economic growth. And so we're actually on the other side where we're fearing price rising even more. And so it just depends. And I understand a lot of people are going to come at me with like, hey, the reason unemployment's low is because people have to work to afford things, and that might be true, right? But it's still a lot of people working. Unemployment's very low. That GDP growth is still there, which is really the technical definition of a recession, is GDP growth based. And so yeah. Financial district buildings on fire. In fact, I think there's an argument that the Fed is making this worse by driving up interest expense, which could feed directly back into inflation. Yeah, I mean, it depends on which way you look at it. Could you explain what a rate cut means? Yeah, I mean, I just did. Sorry. A rate cut means the Federal Reserve is going to lower the federal funds rate, which would signal less fearing of inflation and more fearing of economic slowdown. And so cutting the federal funds rate would be the Federal Reserve trying to bring interest rates down to stimulate spending and stimulate the economy because of risks of the economy slowing, which is not what we're in. I think it's way too early to do that. I think inflation is still sticky. But, it depends, I guess, on which way you look at it. Yeah, all good, Syed. It's all good, brother. I'm just kind of messing with you. But yeah, basically a federal funds, lowering the federal funds rate, trying to bring interest rates down is what a rate cut means. It would signal a less worried about inflation Federal Reserve and a more worried about economic slowdown Federal Reserve. All right, chat. What do you guys think we're going to do today? Let me look at the polls. They said it was just housing and gas that ran up the CPI and housing prices lagged. So if not today, June for sure. Well, I mean, it could be today, it could be May, it could be June, it could be July. You know, the Fed meeting happens every 6 weeks. And so I'm not sure when it's going to be. We'll see. What's your thoughts on people who call themselves bulls, bears, and etc.? It's so funny, honestly. Well, that's just a market term. It just means are you bullish, are you long or short? Do you want the market to go up or down? Do you think the market is going to go up or down? Bulls think the market's going to go up. Bears think the market's going to go down. Once you're involved in the trading industry long enough, it'll become terms that you understand very well. Even if you didn't cut today, it's still good for the dollar. Wait till the $1 trillion government debt payments come to roast. Yeah, I mean, I don't think we're getting rate cuts this month. Lots of things can happen. Yeah, I mean, I think you gotta look at both sides of the direction spectrum. But isn't inflation itself an artificial construct, certainly in production and manufacturing? Well, inflation is human nature, you know. Again, like you can't. Greed is very predictable, okay? And so, an example of this, again, I always use the same example because I think it's the easiest to follow. If I'm selling bubblegum and my bubblegum sells out every time I put it out by noon, I put out 100 pieces of bubblegum, it's all gone by noon, you know. I got a couple options. I could buy more bubblegum, or I could raise the price of what I currently have. You know, and that's a very common thing. That's a very business-minded thing. Like, yo, I can raise the prices. Supply and demand is a real thing. And as demand goes up, prices get higher. You know? And so, yeah, I mean, I think we can't stop that. That's impossible to stop, you know? Unless we're going to put restrictions on everything, inflation's going to increase as spending increases. Because businesses can, you know, because the business understand there's also going to be slow periods where people stop buying as much, and raising the prices during the high periods compensates for the slow periods. It's nuanced, you know. You got to, you know, understand it from a business perspective, I think. Any thoughts on Intel about calls today? Huh? I mean, I don't know what Intel's going to do. Intel's down a lot today, really. The market's pretty flat, honestly. Like, the SPY's been chopping up and down around the previous closing price all day. So is the Q. So the market's pretty much flat today. It's not like super bullish, super bearish. It's pretty much a neutral day right now. It's to the point where I don't really want to trade. Yeah, I mean, stock valuations. I'm not really talking about stocks, really. I mean, we're talking about stocks, but economics doesn't have much to do with stocks. You know, again, usually in a period of tightening, in theory, the stock market would go down, but AI and stuff like that doesn't care about any of that stuff. They don't care about rate hikes and rate decisions and inflation. I mean, they care about inflation, but yeah, it's a different animal. Hello? Hi. Yeah, market's very choppy. We have to look at the bigger picture. The discount on my Apex coupon is 80% off in 1 day pass, which I think is the largest going on right now. It should be the largest. Again, if you want to check it out, here's the link. Again, if you want to check out Apex, a great way to help support your boy here in this channel. Apex is a sponsor of mine. They're great. They're a great product. If you want to learn to day trade, limit your risk. For the time being, you get 80% off plus a 1 day pass, which means that you can get funded. Which means that you can get funded in 1 day if you pass the test. The reason Apex is very useful is because they give you a demo and they test your skill. If you could pass the test, they fund you. You get to, so they give you a demo account, they test your skill. You got to hit their profit target without hitting the max loss. The base one's a 1-to-1 ratio. You only have to make $1,500 in profit on a $25,000 demo account without losing $1,500. So it's a 1-to-1 ratio. Once you're funded, if you hit that, as long as you followed their rules, you get funded and you receive 100% of the first $25K per account and 90% split after that. And so the risk is very limited. You're not risking thousands like you would putting the money up yourself. And most day traders lose. And if you get funded and you're good enough to pass it and you get funded, you get first 25K and 90% after that. So the reward is almost identical to putting the money up yourself. It's just noticeably less risk. And again, for right now, they have this big 80% off sale. If you want to use my link, it's a great way to help support me. But again, they are a sponsor. I'm incredibly biased in their favor because they pay me money. You should use my promo code BT, Beginner Trading BT. You can also use Triple B. And again, if you want to check them out, great way to help support the channel. There's the link. I'll keep rolling 1 month treasury bills, easy 5%. I can cut treasury off quickly at maturity. So I've heard about a couple people doing this with T-bills. So when you say you keep rolling 1 month treasury bills, so are you talking about an easy annual 5%? Are you talking about an easier annual 5%? So you're basically saying you're just going to keep buying treasury bills every month to earn 5% annual return? A lot of people misunderstand T-bills where they think that they're going to earn 5% in a couple days or whatever. Like if it's a 30-day T-bill that they're going to make 5% in 30 days, and you're going to make 5% divided by 12, whatever that is, which is, let me see. You're going to make 0.4% in a month, which isn't bad, I guess. If you got 100K, it's not that bad, but it's not necessarily good. You're going to make like $400. It's not bad, I guess, Yeah, it's not 5% a month. I wish it was, Or not $400. No, you're gonna make $400. Dude, I'm coughing bad right now. But no, my math was right. What is Flash Manufacturing PMI and is it good? Manufacturing PMI is the Purchasing Managers Index. It's the strength or weakness on manufacturing. It signifies jobs, working, stuff like that. I don't think it's today though. That might be tomorrow. I don't think every Fed meeting people think the Fed's gonna crash the market somehow. Very rarely they do. I think it's just kind of cool to bet against the Fed in that way, Dude, my throat is hurting, bro. I think I got a virus. But yeah, somebody saying you're rolling 5%. Where to go? Rolling 5% T-bills, easy 5%. And I can cut the treasury off quickly at maturity. Yeah, I guess that makes sense. It limits your risk. If the yield goes up, you'll profit from it. If the yield goes down, you know. Greetings for Geneva, bud. Looking forward to seeing the decision today with you. Hey, thanks, man. Yeah, it's gonna be a pause, and then I'm guessing. What do y'all think? Powell's gonna be hawkish or dovish today? Zinc? Nah, I mean I'm good. What's your prediction? June is my prediction. Yeah. Carol's been feeding me vitamin D. Carol gets all this like vitamin D powder. She gets this vitamin D liquid, vitamin D vitamins. I try to just go sit out in the sun, but you know, on cloudy, cold days like this, it's kind of difficult. Hawk, dovish, huh? Rate hikes? No, we're not gonna raise rates today. It's gonna pause. I'm gonna go with a hawkish Powell. He's gonna be more data. We need more data. John, go get garlic vitamins. Maybe. Yeah, that's what I'd guess. That would be hawkish. No. Nova says Powell have a negative tone, like we need to work on inflation. Yeah, that's hawkish. Because a hawkish tone means the Fed is worried about inflation, and so they're trying to keep interest rates high to discourage spending so that prices go down, is the logic behind it. Feels like the dollar index will go down to 103. Well, that would usually mean the market goes up. If the Dixie falls, the market's probably going up. Yeah, rate hikes are definitely, they're not even, like, if we look at the probabilities here, chat, those aren't even in the, like, nobody's expecting a pause or a rate hike today, you know. So here's a pause, which is 99-1 on keeping the federal funds rate here, and then here is a 25 basis point cut, which is just not gonna happen. I mean, maybe it does. I might be wrong. I haven't been wrong about a Fed meeting in like a year plus, you know. So what that means is not that I'm some great predictor of Fed decisions, but more so that the Fed's very balanced, and so typically this percentage is right. Like, we're very unlikely to cut rates today. Maybe we do. I don't know. We'll see. You know, I'm so curious to see the market's reaction, but it's just super unlikely. Gold correcting on the daily. Dove for the rest of the week. Hawk following weeks. Will this be Powell today? And yes, this is me. Is this Powell today, guys? Will this be Powell today? You know? And yes, that's me right there in the hockey shirt. I'm from Louisiana, but believe it or not, I was a hockey fan as a kid somehow, you know? I was terrible at it. I was just not good at it. I was kind of a nerdy, weird kid, you know? But this is actually this is a Harris hawk. It's not a red. I wanted to say it's a red tail. This is actually a Harris hawk. You can see Harris hawks are a little bit smaller. They're not as native to Louisiana. The hawks you see in Louisiana, the big ones are going to be red tail hawks, but they're not really, you know, they're not really native. Or Harris hawks aren't really native. Papa Powell. You'll be able to watch the FOMC live right here. Yeah, that's my dad. Cooper. Yeah, we have Cooper Hawks, Red Tail Hawks. Yeah. Sparrow Hawks. Little bitty Sparrow Hawks. Yeah, we have really weird hair. Like, I grew up blonde hair, like with blonde hair. Like, you can see my hair. By the time I hit this age, my hair had changed a little bit. But I had blonde hair as a kid, you know. Somehow over time my hair turned dark. I guess my dad's is the same, but I'm from Baton Rouge, Louisiana. So I'm like 45 minutes outside of New Orleans. Bloomberg saying Fed expected to give clues on rate cut path. Well, yeah, they probably will. They'll probably talk about it, like what they're gonna do. Again, I don't know what they're gonna do, really. Again, I don't know. Tesla's still sitting pretty sideways at 173s. So you're back in your base form? Yes, you look like your dad. Yeah. A lot of people tell me that. Make a poll to see what Rolex watch Powell will wear. Does Powell wear Rolexes? I haven't noticed. I'm like a watch guy. But I don't know what Powell wears in terms of yeah, I don't know what. I don't know what kind of watch Powell's about to wear. Let me look at the last one. Hold on. If I'm Powell, dude, I'm not even wearing a Rolex. I'm gonna wear like a freaking AP or something crazy. Powell's got a ridiculous net worth. A ridiculous net worth. You gotta remember, before he was the Federal Reserve Chairman, he ran an investment bank. Like, Powell's balling out of control, you know. Powell's got more money than me and everybody else in this chat. All right, look, here's the September Fed meeting. Let's see what he was wearing here. I can't even see his watch. He had a purple tie, though. I don't know what that means. Balance? I just gotta look this up. Jerome Powell watch. Well, Powell cut rates today. I'm doing a... "30 minutes, chat. 30 minutes." Was Powell wearing a Submariner? Oh, he was. Flexing on everybody. Look at Powell. I think it's a Submariner. I can't tell. It's upside down. It looks like a Submariner, like a black-faced Submariner. I wanted a Submariner. I was gonna get the black and gold Saints Submariner, but like, and I actually ordered one. So I ordered it. I went to the store, freaking Hellsberg Jewelers. You know, there's a difference. So the reference number 11 whatever it is. Hold on. I gotta look up. I can't remember. So yeah, so they were gonna give me 16613, this one right here. So I was gonna buy this one, but it wasn't this one. It was supposed to be the 116613. The extra one means it was made after 2010 or 2011, and the date isn't yellow, and it's a newer version, so it's a little bit more expensive. And so I asked him, I was like, hey, is it this one? And he was like, yeah. And it was the new one. And he was like, yeah, it's the new one. I'm like, okay, cool. I'll order it. I have to put a down payment down and everything. I go to pick it up, and it's the old one. You know, and they're trying to charge me like a 20% premium on the new one, or on the old one. And I was like, look, dude, this one is the old one. I was like, this is the 116 or the 16613. It's not the new one. I'm not paying that for it, you know. And then I ended up working out a deal. I ended up getting the Batman one instead, you know. It's the only one I've ever bought. I always wanted to buy one. I don't ever wear it, but you know, this is a cheap watch that I'm wearing now. But yeah. Anyways, I bought it because it's kind of like a trade, right? If you look at Rolex prices, and if you look at the one I bought, I got in at the perfect time too. It's a GMT Master 2 is the watch, is what it is. A GMT Master 2. But yeah. All right, so market's very sideways, Chad. We still got 25 minutes left. 25 minutes before the Fed decision. All right, chat. Would a neutral typically mean a positive for the market? Not really. Neutral is, a pause is what's expected. So that is neutral. I don't know if it would be considered a good thing. But yeah. Yeah, definitely top 3 in the world right now for sure. Powell, he flexes on people with his watches, dude, man. Hey, what's up, smart film? Nah, I made him crack the back open of the watch. I don't trust, even if Hellsberg's Warren Buffett's company. So they already had it authenticated, but I made him crack the back open too. I just want to look at it. I don't trust anybody with Rolexes, especially. Bro, the fakes are getting really freaking good. Really freaking good. So I don't trust anybody. I'm not about to spend that much money on a watch without looking at the back myself. You know? What was that? Oh. All right, so again, the story of this Fed meeting is that relative to the last meeting, we've had high inflation data, which means that the Fed's less likely to cut. It's less likely than at the last January meeting that we're going to cut rates today. It's more probable that we're going to pause or skip rates. Very unlikely that we're going to cut rates today. We're not going to raise the federal funds rate at all. We're not going to lower the federal funds rate at all. I think we're going to keep it the same, which is to be expected here, you know, looking at our poll numbers. We got almost 1,700 votes. 33% think the Fed cuts rates today. Bro, what are y'all talking about? We've had high inflation data since the last one. Again, it's just super unlikely. Sometimes I just don't know about the chat, man. You know? Where's y'all's decision-making ability at? You know what I mean? All right, chat. Again, gold's still up there at 2160s here. Apple at 177s. So we still got a little bit of time left until the Fed drops this meeting. We'll see what happens here. You know, we'll see. All right, guys, you ready? Where's my drink, bro? I got a drink. I need a cough drop, dude. I blame you guys. Where's my drink at? I got one. What'd I do with it? Ugh. All right, chat, 20 minutes. 20 minutes before the Federal Reserve press conference here. It should be a fun time here, team. It really should. NVIDIA, look, the market's so flat right now. Again, we pull up charts here. Here's NVIDIA. Look at Tesla. Tesla chart. I could draw a line through everything today. A straight line. Look. Flat. Boring. Nothing going on. Here's NVIDIA today, too. People are acting like NVIDIA crashed and burned overnight because it didn't break highs. That's how you know people are super hyped up about it. If NVIDIA doesn't break, if NVIDIA doesn't move up 10%, people are acting like it crashes. This is the NVIDIA daily chart. We've been sideways really since the 8th, you know, so we've been sideways for almost 2 weeks now. We haven't really gone anywhere, done anything for 2 weeks, and I think sideways is good. I think if we could just hold the gains that we've made this year, the market will be fine, but we got to hold. If we start breaking down, if NVIDIA drops to 600, you know, the market's in trouble. The market's going to follow it down, and I think that could cause some scary action here in markets, some scary action. Top 3 most spoiled traders in the world right now. Diet Coke is bad. It's not a Diet Coke. It's a stevia cola. All right. It's a liter of cola. Amazon, pull it back. Are we bullish or bearish? I'm not anything. I have no idea. I'm assuming Powell's going to be somewhat bearish and it's going to drop the market. Is my guess. I think Powell's going to be somewhat what's called hawkish, which means that Powell's going to be inflation fury. And that's going to make the market go down. That's my guess. But he's going to pause interest rates almost certainly. Again, I don't know for sure. I'm just kind of throwing things out there. But that's my guess. He's been like that for the last few meetings. And so I'm guessing he's going to continue like that. I think he's just going to continue to be bearish. Is Diet Coke okay? Nah, man. I'm good on Diet Coke. I don't really like drinking any of it. Yeah, join our Discord. It's completely free. Doesn't cost anything, you know. Top 3 greatest trader of all time is sometimes there. Inflation numbers and retail sales were bad recent. Yeah, again, I don't know if it's a dump. I just think Powell's going to be hawkish. I don't think we're going to cut rates anytime soon. And again, the logic of this is very simple, chat. I'm going to go through it again since we're a little bit closer to this meeting. The logic is very simple. Okay. The Federal Reserve tries to control the economy and influence it. If the economy is at risk from too little spending and too little economic growth, then the Fed will step in and bring interest rates down to almost zero through quantitative easing, through money printing, through reducing the federal funds rate and lowering inflation, or lowering interest rates so that people can spend more. When people spend more, it thus stimulates the economy. The other side of that, one of the consequences of that QE, it's abbreviated to QE. One of the consequences of making interest rates so low and stimulating the economy, injecting liquidity into it, is people start spending way too much and inflation spikes. And that's what we've been in since 2022. We've been in a market in which inflation has spiked. Inflation got up to almost 9%. And then the Fed plays the other side of that in what's called a hawkish Fed, which means a Fed that's fearing inflation and is trying to keep interest rates high. If interest rates are high, people are spending less because they got to pay more money in their mortgage or in their car payments. And so ultimately it trickles into lower spending, and eventually businesses lower prices to compensate for it. So right now we've been in a period of a pause. The Fed has not been raising rates. They raised rates for a long time. If you look at this graph here, after 2020 and the pandemic, the Fed did come through and start raising rates, again trying to keep interest rates high, and it did the job. Interest rates were high. Mortgage rates still 8% right now. And inflation has gone down. Their target is 2%, but it has gone down to like 3.5%, depending on which metric you look at. You can look at CPI, PPI, PCE. They're all around 3%. Some are 3.5. Anywhere between 3 and 3.5% is where most inflation metrics show. And that's good. I mean, it's not a bad inflation rate, but last readings were higher than expected. You can see we've actually been pausing rates, which is what we're currently in right now. What's the most probable thing today is another pause, keeping this line flat. And again, the federal funds rate is the interest rate that banks charge each other to lend money overnight. That eventually trickles into like other bank loans and stuff like that, and so that'll trickle into other interest rates. But this is the shortest term, and eventually it'll trickle into long term as well. But yeah, it's very likely that the Fed is going to pause. I don't think they're going to cut. A lot of people do think they're going to cut. Personally, I don't. I might be wrong. I just think it's too early to cut. I think inflation was higher than expected, and we're not near the 2% target. And so I think it's too early to cut. And I think if we do cut now, inflation is going to be something that's going to stick with us for a period of time, and I don't think that's a good move. The only reason I think we should cut rates is if we start really dropping in GDP growth and banks start failing and the market looks to really turn. In that regard, I think we should start cutting rates. But as for now, I think it should be June, July, maybe later than that even. The other question is, when does the Fed end their quantitative tightening? Again, QT is basically the Fed not buying up a bunch of bonds and letting their bonds mature and run off their balance sheet. This keeps interest rates high and contributes to less spending. The market has less liquidity and so forth. So again, we'll see what happens. That's another question. The Jerome Powell in this last stuff said that this would probably be sometime later this year, early next year. And so again, if you want to know when interest rates are going to start going down, if maybe you're a real estate professional and you want interest rates to drop, listen to what he says about when they're going to end QT, when they're going to stop tightening is really what he's going to say. He's going to say, we're tightening, we're going to stop tightening. This is when we're going to start or stop or whatever he wants to say. This is when we're going to stop. They're already tightening now. And so, yeah, that's what you want to pay attention to. Other things to listen for in this meeting are going to be inflation expectations, recession, GDP growth, what the base case is for this year in terms of cuts, like when the Fed is going to potentially start cutting rates, whether that is next meeting in May, the meeting after in June, the meeting after in July, past that, August, September, whenever the next meetings are afterwards. And what does 2025 look like? When are we going to start cutting rates? When is the quantitative tightening program going to end? And those are things you want to watch for. Yeah, what he says after, it's probably going to be a pause. What he says afterwards is going to be much more influential and big. Like what he says afterwards is going to matter more than everything else. Yeah, we'll see. I'm 100% flat. Now, in the end, this will cause volatility. Y'all want to be careful not to take major positions between now and really 3. 2:30 is when the press conference is going to start. It'll probably at least go on until 3. So, yeah. Again, we got 13 minutes. 13 minutes. We got about 2,000 people here live. Yeah, it might not be crazy. It just, again, a lot of it depends. Who knows what he'll say? A lot of it depends. We'll see. I hope he says optimistic, good, bullish things. I hope I'm wrong about the hawkish stance he's going to have, but I don't think I am. I think inflation data was high. There's going to be a less likely chance of the chances of a rate cut and inflation are going to have a negative correlation. The higher inflation is, the less likely we are to cut rates. And so inflation was higher than expected. Again, what was CPI last? Let me see. Okay, CPI last time came in 0.4% in February. That's base CPI. So here's the last CPI report. And again, the Fed doesn't really use CPI. They're more of a fan of, I think, personal consumption metric. But again, 3.2% on the year is what we're at. 12-month percentage change, 3.2% on the year. Core came in at 3.8%. So yeah, inflation's still a little sticky. We're core is around 4%. Regular CPI is at 3.2, which isn't terrible. I mean, it's not like it's a crazy high rate, but it's not the 2% target for sure. On the month, it came in at 0.4%. So how will a pause affect gold? Pause is neutral. I'm not sure. Theoretically, it would go sideways, but I don't know. Usually the market does something. Lately, it's been drops. Like lately, the Fed meetings have made the market go down. But again, I'm going to tell you that to make you understand the reactions to a as expected reading for the Federal Reserve press conference and result are not predictable. Like last time, we might have dropped from the FOMC meeting. This time, we could shoot up. And in fact, I'm going to go ahead and just because of that, I'm going to bet that we're going to pause and the market's going to go up. That's my bet today. Again, I might be wildly wrong. Don't copy me. I'm not an investment professional. I'm not liable if you lose. Always make your own assessment. Trade responsibly. Don't copy me. But yeah, that's my guess. I did a Twitter poll also. We said, will Powell cut rates today? 75% smart folks said no. 25, let me think of the most delicate way to put this. 25% of uninformed folks on Twitter think we're gonna cut rates today. Again, I think they're wrong. Watch us cut rates today. I'm gonna have to eat my words. We'll see. Who is Nightbot? Nightbot's my friend. Leave him alone. I will 100% copy your trade. I'm not trading. I'm not doing anything. Don't copy me. We will pause. Market will go up and fall at the 2:30 meeting. Yeah, I agree with that. I can go down with that. You need to sound more confident. Say, I think I am the best, but I'm not responsible for any loss. I'm the top 3 worst trader of all time in the world, and that's something I'm incredibly, incredibly confident in. No way there's a rate cut unless the Fed has already broke something. Yeah, 100%. Hey, again, that's the only way we should cut rates. Like right now, again, understand, cutting rates makes inflation worse. And so the only way we should start cutting rates is if we start to genuinely risk recessions, depressions, bank failures, the whole nine. Like that's the only way we should cut rates. And again, we're just not there yet. The economy's okay. The jobs market is okay. Inflation is not at a crazy unreasonable level. But it's also nowhere where we want to be. And so I don't think we should cut rates now. I think June plus is when we should cut rates. But again, I'm not the Federal Reserve chairman. Powell could squash me with his wallet. And so what do I know? Conference is at 2:30. I just want to win, bro. Me too. I'm the number 1. Okay, I know I'm number 3. So, I mean, I'm not going to argue about who's in front of me. Do you have a public portfolio? No. I'll tell you what I'm holding right now. And this is a green portfolio. Nice. This portfolio has done me really well on the year. You can check it. All right. I am in Apple, AMC, ARM, Baba, Citigroup, Chewy, Delta, Disney, Etsy, Ford, Gold, GameStop, Google, Home Depot, Honeywell, Coca-Cola, MGM, Microsoft, Nike, Oracle, Pfizer, Palantir, PayPal, Snapchat, SoFi, SoundHound, Tesla, Tyson Foods, Unity, Walgreens, Walmart, and ExxonMobil. And I am up 4 figures at least in that portfolio. Made money last year in it as well. And I'm only losing out of this whole portfolio, and this is a longer term portfolio, I'm only losing in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Only in 10 of these out of like 30 something am I down in. So it's a good portfolio. I'm up like $100 today on it. So bars. I have AMC and Pfizer, bro. Did you not hear me? The second one, Apple AMC. I'm down in AMC. It's one of my worst trades, but hey, I'm in it right now. You know, so you can't say I'm not supportive of the meme community, I guess. I'm in Pfizer as well. Average price on Pfizer right now is $32.90. I'm down in it, but that's okay. All right, chat. Hey, we got 8 minutes. 8 minutes until the actual rate hike decision. 8 minutes here, team. Be ready. 7 minutes, really. I'm not saying anything anybody tells me to say. Ariels. Okay? I'm not falling for this, all right? Yeah, it's all right, Blaine. I'm down in those two, but it's okay. I bet my bank account on a 25% rate cut. So you're betting we're going to cut rates 25 basis points. Powell loves to do the opposite of what the economy needs. I mean, smart film. I think you're wrong, bro. We can do a more fun bet that's not as risky for both of us. You might have $5 in your bank account, bro. I'm not betting you that. Again, I'll bet. You can call me Steve for the rest of the day if I'm wrong. All right. That's the bet I'll make you. But Tesla up today. That's nice. Are rate cuts bullish? It depends on how. They're nothing. They're not bullish or they're not bullish or bearish at all. It depends on what you. If you fear inflation, it's bad. If you fear a recession or depression, it's good. But again, we're not anywhere near a recession or depression right now. So cutting rates this early is bad, in my opinion. It's going to cause inflation problems to be worse. It's just not a good move. I'll call you James. Okay. What about Jiminy? What about Jimothy? You can call me Jimothy for the rest of the day. No, depression's worse than a recession, but they're similar. How many minutes till he speaks? 35. Apple up to 177. Apple's rising right now. I'm in Apple. That's good. All right, chat. We got about 3,000 people here live. Usually when Powell speaks, the market tanks. Yeah. Jimothy the third. All right. Bro, where is my drink today? Hold on. Oh, there it is. All right, I got it. Look, there it is. All right, we're here. It's not a beer, okay? It's a stevia cola. Or a Zevia cola. All right? It's a sugar-free, healthy Coca-Cola with caffeine in it because I need it right now. What do you guys think of running a calendar spreads on days like today? I don't mess with them. Yeah, I do. Or I have had one. I'm getting better. I got sick Friday. All right, chat, we got 3 minutes. Stock prices are disconnected. All right, chat. Hey, we got 3 minutes here, team. 3 minutes. We got about 3,000 people here live. We'll see how this goes. Again, Powell's going to be speaking live at... Powell's going to be speaking live at 2:30. So we still got some time until then. I'm looking at the poll. I'm glad the poll switched. Most people expecting July plus. I agree on July plus. Again, if Powell came in and cut rates today, I'm bearish in the market. I think that's going to make prices go up too much. People are going to be complaining about inflation for years. I just don't agree with that. Personally, I think we need to wait. I think pausing is fine right now. I think the market's been getting better. Let things settle. Stop pushing inflation higher with, potential rate cuts. It's just too early. But we'll see. All right, chat, we got 2.5 minutes. 2.5 minutes. Amazon at 175. All right, guys, we got 2 minutes. 2 minutes. This timer's a little bit off, but it's okay. No cut in $24. I think that's possible, and I'm okay with that, to be honest, David. Again, I don't care about buying a house. If I buy a house, I'm going to pay cash for it. I'm not going to get a mortgage anyway. I don't care about financing a car right now. And I know I'm an outlier potentially here, and other people want interest rates to go down, and so they're rushing cuts. I think there's damage to be had by rushing cuts. Again, I don't care enough about financing anything to need rates to go down that much. And again, I know I'm an outlier. I might not be the majority here with that, because again, real estate professionals, a lot of real estate professionals are struggling right now because interest rates are 8%. Nobody wants to buy a house. Like you cut the amount of people that are going to use your services in half in real estate whenever you take away cheap mortgages. That's, in 2020 or before 2020, you got 2.5% mortgages. Now they're 8%. It's very difficult to get people to buy a house. All right, guys, we got less than a minute. Or no, we got about 1 minute. All right, Chad, give me your last minute predictions. Will we cut rates today? Will we cut rates? Yeah, the real estate laws are weird right now, dude. The National Association of Realtor change is just, it's out there. Like, what happened was weird, And again, we'll talk about that later. No. Watch me lead everybody into the fire here and just be wildly wrong. Again, we got 30 seconds left, chat. This timer's early. We got 30 seconds. 30 seconds, chat. Again, will Powell cut rates today? I don't know. All right, here we go. You guys ready? Here we go. Hit the live button next to the play button. Make sure you're fully caught up on stream. Here we go. And there we go. Oh, wait, this is Tesla. All right, here, I got to put the SPY up. All right, market's up. Looks to be a flat pause reading. So federal funds rate, yeah, they kept it the same. A pause. They pause rates, I'm pretty sure. SPY's ripping up from it, though. Yeah, so they held it steady. They didn't raise rates, unchanged. As I said it would be. I told you guys we were going to pause. Hey, do I get your wallet now? Can I call you Jimothy right now, guy? Whoever I bet with, can I call you Jimothy right now? Again, it's a pause. I told you guys it was a pause. Very predictable. I've been right about every single one for like a year straight. It's so rare that the Fed's going to go outside of expectations. And again, I was even right about the direction. I said we'd probably push up on this, and look at what we did. Again, you get into like a flow state of like understanding the market even. Like, we went down afterwards. The market is balanced. An efficient market is balanced, right? So if the last FOMC meeting we paused and we went down, I bet that this FOMC meeting we'd pause and go up. And again, my guess is Powell's going to have a hawkish stance. But again, the Federal Reserve paused rates. Again, keeping things steady. We'll put this up on screen. Remember, Powell speaks. Powell speaks at 4:30, chat. Or at 2:30. All right, so we'll put this up on screen. Again, we told you guys what would happen. We told you guys we were not going to cut rates. Where's he at? Where's my guy at? Where's Jimothy at in here? All right, so again, we did move up. Honestly, I don't know how I got this right. I'm just in tune. Here, you know what? I'm in tune. I said we would pause, the market would go up. I'm just in tune with this. You're welcome. I didn't lead you into the fire. I led you to green pastures. My nose is super stopped up, but you're welcome. All right, chat, we're up to 517.40s. Yeah, my guy Pawn helping me out here. Look at this. Look, so again, what did we do here, chat? Look, Pawn helping me out. Look. This time we could shoot up. And in fact, I'm going to go ahead and just, because of that, I'm going to bet that we're going to pause and the market's going to go up. That's my bet today. Again, I might be wildly wrong. Don't copy me. I'm not an investment professional. I'm not liable if you lose. What did I say? What did I say? Did I say we were going to pause and the market was going to shoot up from it? Man, what is this right here? What is that? Man, dude, I don't know how I knew that, man. Just in tune with the world. You're welcome. Man. That's an AI bot? Oh, bro, that would be hard for me to do that, but yeah. We'll see if we keep going up. All right, chat, we got Jerome Powell press conference at 2:30 coming soon. Jerome Powell press conference at 2:30 coming soon. Stick around. Again, don't go anywhere. This is not the market mover right now. This is not the market mover. Okay, the market mover is the press conference that starts at 2:30. We're going to stream it live. We'll put a timer up here. Get ready for it. Okay, we got 25 minutes roughly until it starts. Again, there's the SPY move up here. We'll put gold up as well. Here's gold. Gold's shooting up with us. Yeah. All right, guys, we got the FOMC press conference live coming soon. Bitcoin, please, 60K. Where's it at? Look at this market move. Up to 518 on the SPY. Gold's still flying up to almost 2200. Crazy. And again, stick around. The press conference starts soon, chat. The press conference starts soon. Also, if you haven't already, check out one of my sponsors. Check out Apex Funded Account Programs. If you want to day trade, we have day traded today. We're down a little bit today. But if you want to day trade in the futures market, here's the futures market. It's the same price action. I can put the S&P 500 and day trade the SPY in futures. No PDT rule. Day trade shorted. I can buy market, buy bid, sell the ask. Just like stocks, there's no PDT restrictions. And I can day trade short. Get in. Only difference is sizing in futures is a little bit different than stocks, but aside from that, very similar to stocks. What Apex does is they give you a demo and they test your skill. If you could pass the test, they fund you between $25K up to $300,000 in funding with a 90% split, and you get to keep your first $25K in profit. If you lose, you're only out what you pay for it. The base one's $30. The top one's like $200. So your risk is much more limited than putting up thousands of dollars yourself trying to learn how to day trade. And again, most day traders lose money. Doesn't matter whether you're on Apex or another account, brokerage, whatever, most day traders lose. And so instead of risking thousands in the beginning, try this. The patterns are very similar to blue chip stocks. There's no PDT rule. And for the time being, you get 80% off Apex accounts. 80% off Apex accounts. 1 day pass as well. So if you sign up today, or if you sign up, pass the challenge, hit the profit target, the base one, you only got to make $1,500 in profit on a demo account. If you do that, same day you get same amount of funding. Same day you get 25K in funding on the base one. So again, 1 day pass, 80% off. You use my link to get the max discount going on at any time. You can always use BT is the link. BT, look at gold rip. You can trade gold in futures as well. Day traded, all that good stuff. Check out the link. They are a sponsor of mine. I'm super biased in their favor, but check out the link. Great way to help support the channel. I'm biased in their favor. They pay me money. You know, not an investment professional. I'm not liable if you lose. And always remember, I am terrible and I have no idea what I'm talking about. Market's finally starting to pull back a little bit as well. You know, market is starting to pull back a little bit here. Again, if Fed is hawkish, I think the market's going to pull back from it. Yeah, the rate cut's done. I mean, the rate cut wasn't... I told you guys y'all were wrong, the people betting on a rate cut. Again, I'm going to tell you this. Listen, understand. Like, for work, right now, I cover every single FOMC meeting. Every single FOMC meeting, I cover the Fed minutes report in between there. I'm very in tune with what the Fed does. Over the past year straight, the Fed has not done anything outside of the expected result. It's been completely what's been expected for a year plus. I think it's been for years since the Federal Reserve has gone outside of the expectations for the federal rate decision. All right, so for whatever reason, every single FOMC meeting, you get people that come in here and make some outlandish prediction like we're going to go way outside of what's expected and do something crazy. And the Federal Reserve just doesn't do that. You might see like the Central Bank of England do it. The Federal Reserve in the US doesn't do that. They don't really shock the markets like that in that way. They don't really say anything that's going to shock the markets. They're almost always going with what's expected. They're very balanced, intentionally balanced. And so it's not something in which you're going to get shocks like this to markets from the Federal Reserve rate decision. Now, maybe Powell will say something that shocks the market. Probably not, but maybe he will during the actual press conference. Again, at 2:30 in 19 minutes. Again, that's possible. But again, my point is like if you're betting every single Fed decision that the Fed's going to go outside of expectations and do something that has a 1% chance, you know, you're just betting on the worst odds you can. Again, it's just super unlikely. The decision is a pause right here. So again, you can look right here. Powell streamed live here, 2:30. FOMC rates unchanged. Target range stand at 5.5 or 5.25 to 5.50. Interest rates on reserve unchanged. What is hawkish here? Hawkish would be a inflation-fearing Powell. A less likely to cut, more hawkish, more keep interest rates high Powell. This really could be a pump and dump situation because 520 to 530 is max range. I don't know. Initial move always reverses. Yeah. Solana's a buy. It's not the pause, it's the 3 cuts that make the market go up. Yeah, again, we'll see. Again, we got the live stream streamed here at 2:30, so be ready. All right, chat. All right, we got the press conference coming soon. We'll see. Again, we got 17 minutes. Gold's still shooting up a little bit. The SPY, where's Nvidia at right now? So this looks bullish, but again, I don't trust anything here with this. Hope it spikes again. Next meeting is in May. Yeah, so we still got a couple. You got to stop a tidal wave. Remember that. Where's Jimothy at in here? Are you going to turn off the music once the meeting starts? Of course. Y'all remind me to switch my headphones out. I do have to switch my headphones out prior to the meeting. But the meeting's going to be in like, a couple minutes. We still got 15 minutes left. You guys ready? Again, so will Powell have a hawkish or dovish stance? Let me know in chat. What do you guys think? You guys ready? All right, so we got a little pullback here. Part of me wants to buy the dip. We'll try trading this. It's kind of volatile to do it, but it's all right. So we rolled over. All right, so we're going to try micros here. And again, this is the futures market, day trading in futures. There we go. Up about 25. Now we're dipping down a little bit. So we took some profit. We made about $15 here. Now we're down a little bit. I might add to it, but I think that's a risky move too. I guess we will. We'll play with it. We're probably going to trade during the actual press conference itself too. I got a 5-minute chart. Oof. I want to give it time to bounce, but man, I think this looks bullish right here personally, but I think we still got to wait. Here we go. We're about flat. I'm going to take some off here and protect the trade so it's not like a crazy big risk. Because again, Powell speaks soon, but good move to take that off. So yeah, we're just getting stuck. I'm going to wait. Definitely not my day, I think, trading. Get a lot of sells coming through. Where's my chat at? But you see, it's very similar to day trading stocks. No cuts. All right, so we're able to scalp some here. We're in 2 contracts left. Take a little bit more off so we lock that in profit. Let the rest bounce. I thought we would bounce. I thought it looked bullish. We'll get out the rest there. I don't know how much we made just now, but yeah, we made some. Any good news on AMD? What do you think about Japanese yen? All right, chat. We got the Federal Reserve press conference coming soon. All right, remember, the big part hasn't even started yet. The Federal Reserve press conference is coming live soon. All right, the press conference starts at 2:30. We got 12 and a half minutes left. So the biggest part hasn't even happened yet. So just be ready, chat. You know, the whole market was flat today in anticipation of this. We just scalped a little bit more, just made about $30 more. And again, we're day trading the futures market, so there's no PDT and PDT rule in futures. You can see I'm basically day trading the SPY price action, or this is actually technically the Q price action. And again, I can day trade this price action. This looks like a flag pattern, so I'm going to take like a small size here and see if we can buy this dip and get a bounce. So there we go, we're up. Let's see if it holds. Now we're flat. I'm going to use this 440 level in the Q as my risk. We're up about $60 over the last few trades. But now it's turning, so we're going to cut it. So we're about flat over the last couple. We're almost exactly flat. I'm using Quant Tower on Apex. And again, Apex funded account program. They give you a demo, test your skill. If you pass the test, they fund you. If you don't, your risk is limited. Every day trader thinks they're going to be like some prodigy savant, and they're just going to day trade and turn $1,000 into $100K and start paying their mom's mortgage. And everybody's going to be like, wow, look at John. He's such a great day trader. You know, but I'm telling you, that's probably not going to happen. You'll probably lose thousands of dollars instead. And so it's much better to try a funded account program instead of putting up thousands of dollars of risk in the beginning. If you lose, you only risk what you're paying for it. Again, it's just a great way to limit your risk in the beginning. People hate on funded account programs, but they're really good for limiting risk. It's a lot better than, again, if without this, to day trade stocks, you need 25 grand in a margin account. And making new traders risk 25K is absolutely ridiculous. There's absolutely no need to make new traders risk that much. It's going to be much better to instead just allow new traders to limit their risk with the funded account program. And again, if you want to try it out, Apex has their 80% off sale. They're a sponsor of mine. I'm biased because they pay me money. But if you want to help support the channel, use my promo code BT, Beginner Trading, get you 80% off. It gets you the max discount. So you get 80% off plus a one-day pass going on right now. Does this look like a bull flag to you guys? I think it does. Like, look. It looks like a bull flag. But we are ahead of Powell's comments. And again, I guess I think Powell's going to be hawkish. I don't really have an expectation. I'm just kind of guessing. And so I'm assuming Powell's going to be hawkish just because inflation data has been a little bit worse. And I think he's going to talk about that. But, you know, who knows? I use Quant Tower with Rhythmic. What's up, Daily Grind? Yeah, I use Rhythmic. Tradeovate's a different platform. If you want to use this platform that I'm using, it's a platform called Quant Tower. This is with a Rhythmic account. Tradeovate looks like this. And again, I can't guarantee you're going to make money. They're a sponsor of mine, so of course they pay me money. I'm biased. But yeah, Quant Tower looks like this. Or that's Quant Tower. Tradeovate looks like this. Tradeovate's not bad. I have accounts on both of them. So this is one of my PA accounts. We're up about 140 on it today. But yeah, this is Tradeovate. All right, chat. Hey, we got 9 minutes here. 9 minutes. Hawkish means Fed is fearing inflation and wants to keep interest rates high. Yeah. So again, hawkish means the Fed fears interest rates. Or low interest rates. Wants to keep interest rates high. How many times am I going to say what? I'm biased. Oh, I'm going to say it a couple times, you know. Or do you mean what does hawkish means? Yeah, I mean, people ask the same questions over and over again. But my job, I mean, my channel's called Beginner Trading. I'm here to teach people, so I mean, I can't get too upset, you know. I understand. How much longer? There might be a timer up there, like just a weatherman it, you know. Let me see if I can get up there. There might be a timer like right there, you know. We got 7.5 minutes left. Hey, what's up, P? What's up, man? 0.01% Powell skyrocket. Are you bullish? I'm not really anything. Short or long about the press conference? I don't know. Hawkish is bearish for the market. It's bearish for the economy, I would say. Not really for the economy. A hawkish Fed Okay, just to understand economics, right? Like, let's talk about it. I'm going to say it again. I've already broken this down. All right, so the Federal Reserve can have two ultimate states of essentially what it's fearing. When you hear dovish or hawkish, it's talking about what the Fed is doing, what kind of monetary policy we're in, and ultimately, like, the easiest way to think about it is, what does the Fed fear? Like, what does the Fed fear regarding the economy? A dovish Fed means the Fed fears recession, depression, economic weakness, too little spending, too high of interest rates. And so a dovish Fed does quantitative easing, injects liquidity into the market, buys up a bunch of bonds. They reduce the federal funds rate, a rate cut. They reduce the federal funds rate, which eventually lowers interest rates for everything else, right? We did it in 2020. We did it in 2008. In the mortgage disaster, the Fed brought interest rates down to almost zero. And thus, it allowed people to spend more money on other stuff. If you're paying less in a mortgage or in a car note, you're going to have more money to spend on other stuff. And so by bringing interest rates down, by reducing the federal funds rate, by buying up bonds and injecting liquidity into the market through quantitative easing, it's going to allow people to spend more. And that's going to stimulate the economy in that way and increase spending, right? The consequence of that type of behavior from the Fed, and again, that's a dovish Fed. That means the Fed is dovish, a less restrictive monetary policy, a Fed that wants interest rates low. The consequence of a Fed like that, and really of those actions, like 2020, we had the pandemic, we had stimulus checks, money printing, quantitative easing, whatever you want to call it. One of the consequences to that is inflation, right? Prices go up. Businesses raise prices because they can't. If people are spending so much, their businesses are going to raise prices. It's the natural consequence of it. And so again, the Fed has their other state, which is a hawkish state, which means that the Fed is fearing inflation. Instead of fearing economic slowdown and fearing economic risks like recessions and depressions, we're on the other end of the spectrum there. So the Fed is instead fearing inflation, high prices, too much spending, too much economic growth. Too much stimulation in the economy, right? So the Fed is then fearing inflation, and that's what happened after 2020. We did quantitative easing. We brought interest rates down to almost zero and inflation skyrocketed. In 2022, it was almost 9%. And so again, the Fed's then that's when the Fed gets what's called restrictive. They go through tightening phases where they're doing quantitative tightening, which instead of buying bonds and injecting liquidity into the market, they are instead just allowing their bonds to run off and mature, reducing their balance sheet. They can also raise the federal funds rate, which in turn will eventually raise interest rates to consumers. And we've been in that period since 2020 or 2022. And we've seen interest rates go up. Mortgage rates are at 8% right now. And again, when interest rates are high, people stop spending as much. Why? Because they don't have as much money to spend. They're paying more in financing and interest. And so, again, the risks of that are inflation. And once inflation gets under control through the risks of a hawkish Fed are recessions and depressions. When you restrict banks in that way, some banks fail. Regional banks can fail. And instead of, inflation going down, you can have recessions or depressions and stuff like that, or they could both happen, but that's my point. There's two sides to the same coin. Anyways, right now we're in a period of pausing Fed. The Fed's been pausing rates. They haven't been raising rates. They raised rates for a year or two. Now we're pausing interest rate hikes. That's what we did today. We announced the pause, meaning we're not going to raise or lower the federal funds rate anymore. We're going to keep it the same. And again, my guess is that Powell's going to talk about, my guess is that Powell's going to be hawkish, meaning he's going to be fearing inflation, is what my guess is. Let me get my headphones on before Powell speaks. We got 5 minutes, a little bit less than 5 minutes here, chat. So again, hit the subscribe button, hit the notification bell. I appreciate it. Let me put this in sub-only mode. I don't think we've done that yet. And so again, get ready for Powell to speak. He speaks in about 5 minutes, chat. We're getting ready. We did bounce. We did bounce. All right, chat, you guys ready? We got the Fed meeting. All right, chat, get ready. All right, chat, let's do this. All right, chat, we got the Federal Reserve coming through live really soon. If you haven't already, hit the subscribe button, hit the notification bell. We appreciate it. Powell's about to speak. We got about 2 minutes left or so, about 2 minutes. So be ready. I'm going to see if I get a better picture quality up here, chat, so bear with me. Let's see how stocks and everything react to this. Make sure we're fully live. Oh wait, can y'all hear the music? Let me make sure. There we go. You ever trade the VIX? No, not really. All right, there we go. That's a better video. We'll keep this one. All right, I'm gonna mute the music, turn the music off so that you can't hear it. So bear with me, chat. Hit the live button. Got the music up. We're live. We're ready. 2:30. Should be starting any time now. 30 seconds. All right, here we go. You guys ready? All right, here we go. Turn the music off. All right. Once he comes on, just let me know you can hear him. I just want to make sure you can hear him. You should be able to, but just to be safe. All right, everybody watch to see what color his tie is. His tie is a super, super important, economic indicator. All right, chat. Who's got the over-under on a purple tie? His last tie was purple. All right, again, what you want to listen to, really, realistically, you want to listen to recession outlook. Whether we're going to cut rates this year is probably the biggest question. Does Powell and the Fed decide to cut rates this year? If they do, that will trigger volatility in markets. So, again, that's what you want to listen to. We're still waiting on Powell. Does the Fed cut rates this year? Again, that's something that you certainly want to pay attention to. You certainly want to listen for whether Powell and the Fed cut rates this year. When it's going to be, I'm guessing June, but if he updates the base, like listen for base case, it'll give you an understanding of like what, what they might do in terms of like bringing interest rates down. Here he is. Sound good?
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. The economy has made considerable progress toward our dual mandate objectives. Inflation has eased substantially, while the labor market has remained strong. And that is very good news. But inflation is still too high. Ongoing progress in bringing it down is not assured, and the path forward is uncertain. We are fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustainably strong labor market that benefits all. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Our restrictive stance of monetary policy has been putting downward pressure on economic activity and inflation. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace. GDP growth in the fourth quarter of last year came in at 3.2%. For 2023 as a whole, GDP expanded 3.1%, bolstered by strong consumer demand as well as improving supply conditions. Activity in the housing sector was subdued over the past year, largely reflecting high mortgage rates. High interest rates also appear to have weighed on business fixed investment. In our summary of economic projections, committee participants generally expect GDP growth to slow from last year's pace, with a median projection of 2.1% this year and 2% over the next 2 years. Participants generally revised up their growth projections since December, reflecting the strength of incoming data, including data on labor supply. The labor market remains relatively tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 265,000 jobs per month. The unemployment rate has edged up but remains low at 3.9%. Strong job creation has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years, and a continued strong pace of immigration. Nominal wage growth has been easing, and job vacancies have declined. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. FOMC participants expect the rebalancing in the labor market to continue, easing upward pressure on inflation. The median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.1% at the end of next year. Inflation has eased notably over the past year, but remains above our longer-run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as from measures from financial markets. The median projection in the SEP for total PCE inflation falls to 2.4% this year, 2.2% next year, and 2% in 2026. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are strongly committed to returning inflation to our 2% objective. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are coming into better balance. We believe that our policy rate is likely at its peak for this tightening cycle, and that, if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We are prepared to maintain the current target range for the federal funds rate for longer, if appropriate. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we have seen on inflation and ultimately require even tighter policy to get inflation back to 2%. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. The committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably down toward 2%. Of course, we're committed to both sides of our dual mandate, and an unexpected weakening in the labor market could also warrant a policy response. We will continue to make our decisions meeting by meeting. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 4.6% at the end of this year, 3.9% at the end of 2025, and 3.1% at the end of 2026, still above the median longer-term funds rate. These projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. Turning to our balance sheet, our securities holdings have declined by nearly $1.5 trillion since the committee began reducing our portfolio. At this meeting, we discussed issues related to slowing the pace of decline in our securities holdings. While we did not make any decisions today on this, the general sense of the committee is that it will be appropriate to slow the pace of runoff fairly soon, consistent with the plans we previously issued. The decision to slow the pace of runoff does not mean that our balance sheet will ultimately shrink by less than it would otherwise, but rather allows us to approach that ultimate level more gradually. In particular, slowing the pace of runoff will help ensure a smooth transition, reducing the possibility that money markets experience stress and thereby facilitating the ongoing decline in our securities holdings consistent with reaching the appropriate level of ample reserves. We remain committed to bringing inflation back down to our 2% goal and to keeping our longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and price stability over the long term. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you.
Steve Leisman, CNBC. Mr. Chairman, the projections show somewhat higher core inflation. They also show somewhat stronger growth. What should we infer from this notion that on average rates were kept the same this year, but inflation is higher and growth is higher? Does it mean more tolerance for higher inflation and less of a willingness to slow the economy to achieve that target?
Well, it doesn't. No, it doesn't mean that. What it means is that we've seen incoming, as I pointed out in my opening remarks, we did mark up our growth forecast, and so have many other forecasters. So the economy is performing well. And the inflation data came in a little bit higher as a separate matter, and I think that caused people to write up their inflation. But nonetheless, we continue to make good progress on bringing inflation down. And so.
When you, just to follow up, when you say that you're willing to either maintain the rate for longer, what is the tolerance of the Federal Reserve for inflation coming in above its 2% target?
So we're strongly committed to bringing inflation down to 2% over time. That is our goal, and we will achieve that goal. Markets believe we will achieve that goal, and they should believe that, because that's what will happen over time. But we stress over time, and so I think we're making projections that do show that happening, and we're committed to that outcome, and we will bring it about.
Rachel. Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. You and others have been saying that relief on housing inflation is coming, but it still hasn't shown up meaningfully in the CPI or the PCE. Does that challenge your assumption about when the shift will finally break through, since it hasn't at that point?
So I think there's some confidence that the market rents, lower market rent increases that we're seeing will show up in measures of housing services inflation over time. There's a little bit of uncertainty about when that will happen, but there's real confidence that they will show up eventually over time. But again, uncertainty about the exact timing of that.
Okay. And will you be able to get overall inflation down to target if housing doesn't break through quickly, and does that affect the timing for eventual cuts this year?
We will get aggregate inflation down to 2% over time. We will. And I would assume that what we'll continue to see is we'll see goods prices coming into a new equilibrium where they're going down perhaps not as quickly as they had been earlier this year, where housing services inflation will come back down as current market rents are suggesting will happen, and where non-housing services will move back down. Some combination of those three things, and it may be different from the combination we had before the pandemic, will be achieved and will bring inflation back down to 2% sustainably.
Nick Timmeros of the Wall Street Journal. Chair Powell, during your congressional testimony this month, you said that your test for making the first change to interest rates does not require you to be terribly comfortable that inflation is at 2% because interest rates are well above neutral. At the same time, you said here after the last meeting that the first cut is highly consequential. Can you reconcile these views for me? If rates are well above neutral, why would the first cut be highly consequential? Is that because you anticipate one cut would be followed by one or two more along the lines of the recalibration you made in 2019, which itself was modeled on the mid-cycle adjustment of 1995?
It's more, I would put it more in the context of what I said in my opening remarks, that the risks are really two-sided here. We're in a situation where, you know, if we ease too much or too soon, we could see inflation come back. And if we ease too late, we could do unnecessary harm to employment and, you know, people's working lives. And so, you know, we do see the risks as two-sided. So it is consequential. We want to be careful. And fortunately, with the economy growing, with the labor market strong, and with inflation coming down, we can approach that question carefully and let the data speak on that. That's really what I was thinking.
How much of that inflation that we've seen so far this year do you chalk up to one-off calendar adjustment effects following a period of high inflation versus some change in the trend we saw in the second half of last year?
So I want to start by saying I always try to be careful about dismissing data that we don't like. So you need to check yourself on that, and I'll do that. But I would say the January number, which was very high, the January CPI and PCE numbers were quite high. There's reason to think that there could be seasonal effects there. But nonetheless, we don't want to be completely dismissive of it. The February number was higher than expectations, but we have it at currently well below 30 basis points core PCE, which is not terribly high. So it's not like the January number. But I take the two of them together, and I think they haven't really changed the overall story, which is that of inflation moving down gradually on a sometimes bumpy road toward 2%. I don't think that story has changed. I also don't think that those readings added to anyone's confidence that we're moving closer to that point. But you know, we didn't. Last thing I'll say is we didn't excessively celebrate the good inflation readings we got in the last 7 months of last year. We didn't take too much signal out of that. What you heard us saying was that we needed to see more, that we could, you know, we wanted to be careful about that decision. And we're not going to overreact as well to these 2 months of data, nor are we going to ignore them.
Hi, yes, Chair Powell. Could you speak a little bit more about the timing? Is there enough data between now and, say, May to be able to get the kind of confidence that you say that, you know, you still need? Or by June, is there enough data for you? Just give us a sense of your thinking there. Thank you.
Yeah, so we make decisions meeting by meeting, and we didn't make any decisions about future meetings today. those are going to depend on our ongoing assessment of the incoming data, the evolving outlook, and the balance of risk. So I really don't have anything for you on any specific meeting looking forward.
But, I mean, just a question of, I mean, is there even enough data for you to be able to?
We'll take,
Sorry.
you know, things can happen during an intermeeting period, if you look back, unexpected things. So I wouldn't want to dismiss anything. So I just would say that the committee wants to see more data that gives us higher confidence that inflation is moving down sustainably toward 2%. I also mentioned, and we don't see this in the data right now, but if there were a significant weakening in the data, particularly in the labor market, that could also be a reason for us to begin the process of reducing rates. Again, there's nothing in the data pointing at that, but those are the things that we'll be looking at coming meetings, and without trying to refer to any specific meeting.
Chris.
Hi, Chris Regaber, Associated Press. Thank you. In the projections, there is an increase in the neutral rate, as you know, and higher rates, a quarter point higher rates projected in 2025, 2026. Can you speak about what might be behind that? Is there a real sense here that the economy has perhaps changed in some way, that higher rates will be needed in the future? Thank you.
So you're right, they're pretty modest changes, but you're right, there was an uptick in the longer run rate, and also there's a 25 basis point increase in 25 and 26. In terms of are rates going to be higher in the longer run, if that's really your question, I don't think we know that. I think we think that rates were generally low during the pre-pandemic, post-global financial crisis era for reasons that are mostly, important, slow-moving, large things like demographics and productivity and that sort of thing, things that don't move quickly. But I don't think we know. I mean, my instinct would be that rates will not go back down to the very low levels that we saw, where all around the world there were long-run rates that were at or below zero in some cases. I don't see rates going back down to that level, but I think there's tremendous uncertainty around that.
Great. And just a quick follow on the projections, you also have 2.6% core inflation for the end of this year. It's already or you mentioned it being 2.8 in February. I mean, that doesn't sound like much disinflation at all. So are you still confident, or the last press conference you sounded pretty optimistic you would get more confidence to the end of this year. Is it right to say that this suggests you're not seeing a lot of disinflation this year compared to what we've seen 2023 and so forth?
I think that higher year-end number reflects the data we've seen so far this year, because you're now in this year. So I think that. Sorry, say your last part of your question again.
Well, just are you still optimistic that you'll get the confidence you need this year?
I think if you look at the SEP, what it says is that it is still likely in most people's view that we will achieve that confidence and that there will be rate cuts. But that's really going to depend on the incoming data. It is. The other thing is, in the second half of the year, you have some pretty low readings, so it might be harder to make progress as you move that 12-month window forward. Nonetheless, we're looking for data that confirm the kind of low readings that we had last year and give us a higher degree of confidence that what we saw was really inflation moving sustainably down to 2%, toward 2%.
Gina Smilik, The New York Times. Thank you for taking our questions. Per your comment to Anne that a weakening in the labor market would be a reason to potentially cut rates, or at least a consideration in making a rate cut, would continued strength in the labor market be a reason to hold off on rate cuts? And just in general, if labor supply continued to rebound in 2024 the way it did in 2023, what would stronger hiring and possibly stronger growth mean for the path forward on policy?
Yeah, so if what we're getting is a lot of supply and a lot of demand, and that supply is actually feeding demand because workers are getting paid and they're spending, and that's, what you would have is potentially kind of what you had last year, which is a bigger economy where inflationary pressures are not increasing. In fact, they were decreasing. So you can have that if you have the continued supply side activity that we had last year with both with supply chains and also with growth in the size of the labor force.
But so strong hiring in and of itself would not be a reason to hold off on rate cuts?
No, not all by itself, no. I mean, we saw, you saw last year, very strong hiring and inflation coming down quickly. We now have a better sense that a big part of that was supply side healing, particularly with growth in the labor force. So in and of itself, strong job growth is not a reason, for us to be concerned about inflation.
Neil. Hi, Chair Powell. Neil Irwin with Axios. How do you assess the state of financial conditions right now? And in particular, do you view the kind of easing in financial conditions since the fall as consistent and compatible with what you're trying to achieve on the inflation mandate?
So we think there are many different financial conditions indicators, and you can kind of, see different answers to that question. But ultimately, we do think that financial conditions are weighing on economic activity, and we think you see that in a great place to see it is in the labor market, where you've seen demand cooling off a little bit from the extremely high levels. And there I would point to job openings, quits, surveys, the hiring rate. Things like that are really demand. There are also supply side things happening, but I think those are demand side things happening. We saw, that's been a question for a while. We did see progress on inflation last year, significant progress, despite, financial conditions sometimes being tighter, sometimes looser.
Michael McGee with Bloomberg Radio and Television. Can you give us more color on how the committee is thinking about inflation dynamics now? What we've seen at the beginning of the year, are they more one-off increases that will fade, or is there more of a secular turn with goods prices rising again and service prices staying sticky? And also, housing prices have been sort of the Godot of this cycle, in that you keep expecting them to go down and they don't. How does the committee see this playing out forward since you've raised your inflation forecast?
So I see the committees looking at the 2 months of data and asking the same question you're asking and saying we're just going to have to see what the data show. As I mentioned, you can look at January, which is very high reading, and you can, and I think many people did see the possibility of seasonal adjustment problems there. But again, you got to be careful about dismissing the parts of the data that you don't like. So then February wasn't as high, but it was higher. So the question is, what are we going to see? We tend to see a little bit stronger, this is in the data, a little bit stronger inflation in the first half of the year, a little bit less strong later in the year. We're going to let the data show. I don't think we really know whether this is a bump on the road or something more. We'll have to find out. In the meantime, the economy is strong, the labor market is strong, inflation has come way down, and that gives us the ability to approach this question carefully and feel more confident that inflation is moving down sustainably at 2% when we take that step to begin dialing back our restrictive policy.
Well, you've talked about the desire to have confidence that inflation is continually moving down. Has the recent numbers we've gotten for inflation data dented that confidence at all?
It certainly hasn't improved our confidence. It hasn't raised anyone's confidence, but I would say that the story is really essentially the same, and that is of inflation coming down gradually toward 2% on a sometimes bumpy path, as I mentioned. I think that's what you still see. We've got 9 months of 2.5% inflation now, and we've had 2 months of kind of bumpy inflation. We were saying that it's going to be a bumpy ride. We consistently said that. Now here are some bumps, and the question is, are they more than bumps? And we can't know that. That's why we are approaching this question carefully. It is very important for everyone that we serve that we do get inflation sustainably down. And I think the historical record, every situation is different, but the historical record is that you need to approach that question carefully and try to get it right the first time and not have to come back and raise rates again, perhaps, if you cut inappropriately, prematurely.
Go to Edward.
Thank you, Mr. Chairman. Edward Lawrence with Fox Business. I wanted to ask you, you received a letter from, well, the Federal Reserve, for independent body, understanding Congress has oversight over that. You received a letter from Senators Elizabeth Warren and Sheldon Whitehouse that said, calling on you to lower interest rates, to cut interest rates, because it says, quote, the potential that it may remain too high for too long has halted advances in deploying renewable energy technologies and delayed significant climate and economic benefits from these projects. So has higher interest rates caused that?
Have they? Well, first of all, I respect our, in our system of government, it is Congress that has oversight responsibility over the Fed. We place a tremendous amount of importance on our engagements with Congress and always treat them with great respect. In this case, I would say those are, our mandate is for maximum employment and price stability and the other things that we do. And that's what we're trying to accomplish. We're trying to do that in a way that sustains the strong growth we're seeing, the strong labor market we're seeing, but allows us to make further progress with inflation. That's how we can best serve the public and leave the other issues, which in many cases are incredibly important, such as those you mentioned, leave those to the people who have responsibility for those.
There was another letter from 24 lawmakers saying that the higher rates are squeezing the working people. How do these letters affect what you guys are doing policy-wise?
We receive these letters with respect, and we write careful responses and address concerns. We listen, again, because we're talking to the people who in our system of government have oversight over our activity. So that's, but at the end of the day, we take that on board, but we have to make our judgments and we have to stick to our knitting, which is maximum employment, price stability, supervise and regulate the banks, work on the payment system, the things that we do.
Claire.
Thank you. Claire Jones, Financial Times. Thanks a lot for the opportunity to ask a question. As chair of the FOMC, would you want to see unanimity on the committee or something close to it, meaning no more than one dissent before you begin cutting rates? Thank you.
We're a very consensus-oriented organization, and we do try to achieve consensus and ideally unanimity. People do dissent. It's something that happens. Life goes on, and it's not a problem. We've always had dissents, and so and you respect thoughtful dissents very much. It's like you may not agree with some arguments, but you really want to understand them. So you may read a book that takes a position that you have long opposed, just to understand that book. So I treat dissents with real respect as well.
So Simon, what would you say?
Simon Rabinovich with The Economist. Can you hear me?
Yes.
Okay, great. Obviously, inflation is some ways away from target. Unemployment, though, if you look at the projection for the full year, 4.0%. In February, we were already at 3.9%, so quite close to the median projection. Are you concerned at all that, notwithstanding the very strong jobs growth, that in fact there may be some cracks appearing in the employment market? You talked about a significant deterioration in the labor market being a condition for easing rates. What would constitute that in your books? Thank you.
So we, of course, monitor it's one of our two goal variables. We all monitor the labor market very, very carefully, and I don't see those cracks today. And we follow all the possible stories that are out there about there being cracks. But the overall picture really is strong labor market. The extreme imbalances that we saw in the early parts of the pandemic recovery have mostly been resolved. You're seeing high job growth. You're seeing big increases in supply. You're seeing strong wage growth, but wage growth is gradually moderating down to more sustainable levels. In many, many respects, things are returning more to their state in 2019, which we can think of as normal for this purpose. That's job openings and quits, and surveys of workers and businesses are always interesting on this. How tight is how easy is it to find a job? How easy it is to find a worker? Those surveys have both come down. So the labor market's in good shape. You do see things like the low hiring rate, And people have made the argument that if layoffs were to increase, that would mean that the net would be fairly quick increases in unemployment. So that's something we're watching, but we're not seeing it. Of course, initial claims are very, very low, and if anything, have tracked down a little bit. So watching it carefully, don't see it. And when I say something, I use the term unexpected weakening in the labor market. So, we do expect the unemployment rate to, the forecast is that it would move up, I think, closer to what we see as the longer run sustainable level. That's just people's forecast, individual forecasts. But we're talking about something that's unexpected. That's where I'll leave it, though.
Steve Matthews with Bloomberg. You mentioned at the beginning of the press conference that the committee felt it might be appropriate to slow the pace of asset runoff fairly soon. I'm wondering, when you say fairly soon, does that mean that the committee would meet about this again in May and a decision could be reached that soon? And I was wondering if you could also just describe the scope of what the committee is discussing here. You're at $95 billion of caps right now. Would that be cut about in half or something in that nature? Thank you.
So that is what we're discussing, essentially, is and we're not discussing all the many other balance sheet issues. We will discuss those in due course, but what we're really looking at is slowing the pace of runoff. There isn't much runoff among MBS right now, but there is in treasuries, and we're talking about going to a lower pace. I don't want to give you a specific number because we haven't had an agreement or a decision, but that's the idea. That's what we're looking at. And in terms of the timing, I said fairly soon. I wouldn't want to try to be more specific than that, but you get the idea. The idea is, and this is in our longer run plans, that we may actually be able to get to a lower level because we would avoid the kind of frictions that can happen. Liquidity is not evenly distributed in the system, and there can be times when, in the aggregate, reserves are ample or even abundant, but not in every part. And those parts where they're not ample, there can be stress. And that can cause you to prematurely stop the process to avoid the stress. And then it would be very hard to restart, we think. So as something like that happened in 19, perhaps. So that's what we're doing. We're looking at what would be a good time and what would be a good structure. And, fairly soon is words that we use to mean fairly soon.
And will there be a discussion about returning to an all treasuries balance sheet at some point?
So that our longer run goal is to return to a balance sheet that is mostly treasuries. I do expect that once we're through this, we'll come back to the other issues about the composition and the maturity and revisit those issues. But it's not urgent right now. We want to get this decision made first, and then we can, when the time is right, come back to the other issues.
Hi, Victoria Guida with Politico. Also on the balance sheet, can you talk a little bit about how the outlook for the banking sector might impact your balance sheet plans? Do you worry that as deposits start to shrink that we could see more turbulence?
We'll be watching carefully, but one of the reasons we're slowing down, we will soon enough, fairly soon, I should say, slow down, is that we want to avoid any kind of turbulence. I wasn't thinking particularly about banking sector turbulence, but we had some indicators the last time. This is our second time in doing this, and I think we're going to be paying a lot of attention to the things that started to happen and that foreshadowed what eventually happened at the end of that tightening cycle, where we wound up in a short reserve situation, and we don't want to do that again. And I think now we have a better sense of what are the indicators. It wasn't so much in the banking system as it was around, for example, where federal funds is trading relative to the administered rates, and where secured rates are relative to the administered rates. Those sorts of things. We will always be watching the banking system for similar signs, though.
Well, is it also because you're not sure exactly how the reserve supply will react once the overnight reverse repo facility, drops nearer at zero?
Well, I think we broadly think that once the overnight repo stabilizes either at zero or close to zero, that as the balance sheet shrinks, we should expect that reserves will decline pretty close to dollar for dollar with that. That's what we think.
Go to Jean. Hi, Chair Powell. Jean Young with M&I Market News. I wanted to ask also about the balance sheet. Will you said that starting the taper sooner could get you to a smaller balance sheet size. Does that mean you don't have to make a decision on when to end QT at this point? And will you be setting up the process for deciding that sooner, or will you wait until we're close to the end?
So it's sort of ironic that by going slower you can get farther, but that's the idea. The idea is that with a smoother transition, you'll run much less risk of kind of liquidity problems, which can grow into shocks and which can cause you to stop the process prematurely. So that's where, in terms of how it ends, we're going to be monitoring carefully money market conditions and asking ourselves what they're telling us about reserves. Are they, right now we would characterize them as abundant, and what we're aiming for is ample, and which is a little bit less than abundant, right? So there isn't there's not a dollar amount or a percent of GDP or anything like that where we think we have a really pretty clear understanding of that. We're going to be looking at what these, what's happening in money markets, in particular, a bunch of different indicators, including the ones I mentioned, to tell us when we're getting close. Then, though, you reach a point, ultimately, where you stop allowing the balance sheet to run off, but then, from that point, there's another period in which non-reserve liabilities grow organically, like currency, and that also shrinks the reserves at a very slow pace. So you have a slower pace of runoff, which we'll have fairly soon. Then you have another time where you effectively hold the balance sheet constant and allow non-reserve liabilities to expand. And then that ultimately brings you ideally in for, brings it into a nice easy landing at a level that is above what we think the lowest possible ample number would be. We're not trying for that. We want to have a cushion, a buffer, because we know that demand for reserves can be very volatile, and we don't want to again find ourselves in a situation where there aren't reserves. We have to turn around and buy assets and put reserves back in the banking system the way we did in 2019-20.
Hi, Nancy Marshall-Genzer with Marketplace. Chair Powell, you said you're waiting to become more confident that inflation is getting to your 2% goal before you cut rates. Can you just sum up more specifically what data you're looking at that would give you that confidence?
Sure. So most importantly, we're looking at the incoming inflation data and the contents of it and what they're telling us. So that'll be, and also the various components. So obviously that's what we want. We want more confidence that inflation is coming down sustainably toward 2%. And I mean, of course, we'll also be looking at all the other things that are happening in the economy. We'll look at the totality of the data, including everything essentially, as we make that assessment. But the most important thing will be the inflation data that's coming in.
Well, are there things that you would give more weight to, like wages?
Wages is one thing. We don't. Our target is not wages. It's really inflation. But we would look to the fact that wages are still coming in very strong, but they've been wage increases. That is to say, wage increases have been quite strong, but they're gradually coming down to levels that are more sustainable over time, and that's what we want. We don't think that the inflation was not originally caused, I don't think, mostly by wages. That wasn't really the story. But we do think that to get inflation back down to 2% sustainably, we'd like to see, continuing gradual movement of wage increases at still high levels, but back down to levels that are more sustainable over time.
Let's go to Greg.
Thank you. Greg Robb from MarketWatch. Chair Powell, could you say at this meeting whether there were more officials who wanted to be careful and go slower than about rates than were at the last meeting? Was there that sense of maybe it's smart to wait? Thanks.
I guess I'd put it this way. If you look at the incoming inflation data that we've had for January and February, I think very broadly that suggests that we were right to wait until we're more confident. So I think I didn't hear anyone dismissing it as not information that we should look at or anything like that. So I think generally speaking, it does go in the direction of saying yes, it's appropriate for us to be careful as we approach this question.
Brendan. Thanks, Chair Powell. Brendan Peterson with Punchbowl News. I wanted to ask you about central bank digital currency stuff. We've been hearing a lot from Republicans in Congress about what the Fed is or isn't doing in a digital dollar. But folks, I know you have said to Congress that you are going to wait for approval before the Fed does anything, launches anything. But folks like House Majority Whip Tom Emmer have said that the Fed is either actively researching or hiring personnel to study the implications of a CBDC. Can you give us any clarity on what the Fed is doing right now on a digital dollar?
Sure. So I think we've been pretty transparent on this, but I'll try harder. So we are not getting ready to, we haven't proposed, we haven't come to a conclusion that we should propose or anything like that, that Congress consider legislation to authorize a digital dollar. And it would take legislation by Congress signed by the president to give us the ability to do what we think of as a CBDC, which is really a retail CBDC with the public of it. So we're just a long, long way from that. What we are doing, and I think what every major central bank is doing, is we're trying to stay in the frontiers of what's going on in digital finance. And it has many, many different areas. You know, it has applications in wholesale finance, in the payment system. And so to serve the public, these issues have become very front burner in the last 5 or 6 years. We need to be knowledgeable about all that. So we actually do have people trying to understand things that are, but it's wrong to say that we're working on a CBDC and then we've secretly got a lab here where we've got one and we're just going to spring it on Congress at the right moment. We don't. I haven't at all in my own mind made a decision that I think this is something the U.S. should be doing. I just think it's something we need to understand, and we do have people who are keeping up with that as part of the broader payments landscape. That's how I would characterize it.
Mark.
Thank you. It's Mark Hamrick with Bankrate. Mr. Chairman, April 27th will mark the 13th anniversary since a Fed chairman began holding regular news conferences. How important has that higher transparency been in your view, both for the proper functioning of the central bank and also in accomplishing your mission? And is there more that you and your colleagues can do on the transparency front, and what might that look like?
I generally think, this movement actually started, 30 years ago, when some academics posited that a more transparent central bank, if the public understands your reaction function, the markets will do your work for you. They'll react to the data. And so it all happens that way. And so there's been a march toward greater and greater transparency. And that certainly Chairman Bernanke advanced that, so Chairman Greenspan did, Chair Yellen did. And so we went from four press conferences a year to 8, so now every meeting really is live now. I think that's a good innovation. I wouldn't want to turn it back. We also have done a bunch of other things. We have an annual supervision report, financial stability report. There's a long list of things that we've done. I think nothing comes to mind as really desperately in need of doing at this moment. We're very transparent. We have no shortage of FOMC participants speaking to the public through the media. And so that channel is full, I would say. So I think it's generally broadly helped and made things better, but not every day and in every way.
Well, to follow up, has there ever been a day where you wanted to put that genie back in the bottle somewhat?
Of course not.
Let's go to
You gotta
Jennifer
love
for the
Powell.
last question.
Last question.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. Not to harp too much more on confidence and inflation, but she did say earlier in this press conference that the recent inflation data hasn't raised anyone's confidence. But when you testified before the Senate a couple weeks ago, you told lawmakers that you are, quote, not far from receiving the confidence needed on inflation to begin cutting rates. So are you still of that belief or not? What are we to take by those words, not far?
So let me say my main message at that in those 2 days of hearings was really that the committee needs to see more evidence to build our confidence that inflation is moving down sustainably toward our 2% goal, and we don't expect that it will be appropriate to begin to reduce rates until we're more confident that that is the case. I said that any number of times, so those were kind of the main part of the message. We repeated that today in our statement. I also, to the language you mentioned, I really pointed out that we had made significant progress over the past year, and what we're looking for now is confirmation that that progress will continue. We had a series of inflation readings over the second half of last year that were really much lower. We didn't overreact, as I mentioned, but that's what I had in mind.
But given that you said that PCE for February, 2.8%, the estimate, and that we have been seeing PCE, core PCE, coming down by 10% every month, I mean, wouldn't you be at about 2.4% this summer, June, July, to a point where you could cut then?
Well, we'll just have to see how the data come in. We would, of course, love to get great inflation data. We got really good inflation data on the second part of last year. Again, we didn't overreact to it. We said we needed to see more, and we said it would be bumpy. And now we have January and February, which I've talked about a couple of times. So, we're looking for more good data, and we would certainly welcome it.
Thank you.
Thank you.
All right, Big Papa Powell. That's it. Press conference over. Let me know what you guys thought. Again, I was wrong about it. I thought Powell would be dovish. Or I thought Powell would be hawkish. Instead, he was really dovish, in my opinion. Very optimistic. Potentially less restrictive Fed moving forward. Again, I still don't know when a cut's going to be. He never really touched on when we're going to start, doing rate cuts and stuff. But again, definitely a more optimistic Powell here. The S&P 500 is loving this too. The S&P broke lifetime highs. You can see the S&P right here on the bottom chart just churning up. Recently broke lifetime highs again. So yeah, definitely a dovish Fed, a dovish talk. If you don't know what dovish means, I see a lot of questions here, like what does dovish mean and all this stuff. Dovish means the Fed is less fearing of inflation and less likely to keep interest rates high with quantitative tightening, with raising the federal funds rate. Dovish means a less restrictive monetary policy and a less restrictive Fed, meaning the Fed's going to do less to keep interest rates high. Right, which is good if you're a real estate broker, mortgage broker. Your interest rates potentially going to come down this year, next year, hopefully when the quantitative tightening fully. He talked about it slowing down a lot. When they're going to pivot out of QT, I don't know. They've been letting their balance sheet run off, and so again, I'm not sure when that's going to happen, but really interesting. And so again, man. Yeah, all good. Again, we are going to trade a little bit today. I think the market's breaking highs. I'm going to short this here at the top and see if we get a little pullback. But it's kind of risky because, again, the market has just been churning up. We made a really big move on the upside already. And so we'll play around with this. We're trading on a platform called Apex Funded Account Programs. There we go. Made 20 bucks just real quick. See if we can lock that in. All right, we'll lock the rest in. So, yeah, we just made about $20. We are day trading the futures market. This is the NASDAQ 100, basically the QQQ. I can also day trade the S&P 500 if you look at this. Here's the S&P 500. I can day trade it in futures. There's no PDT rule. And again, one of my sponsors is Apex Funded Program. They give you a demo, test your skill. If you could pass the test, they fund you in futures. And there's no PDT in futures, and they give you a demo. The base one's a $25,000 demo. It only costs $30 if you use my link and my promo code BT. Again, it's $30. If you lose, it's not the end of the world. But again, your job is to hit $1,500 in profit on this challenge account, and without hitting $1,500 in losses. It's a 1-to-1 ratio. And again, if you can do that, they fund you $25K with a 90% split. They're one of the most legit funded programs in the world. They paid out over $100 million to their traders, to their funded traders in actual withdrawals. And so, yeah, great way to learn how to day trade. The beautiful part about this is that it limits your risk. Instead of risking thousands of dollars trying to learn to day trade a conventional account in stocks or whatever, you can try futures, day trade the S&P or the NASDAQ. The patterns are very similar to something like NVIDIA, Apple, Amazon, but there's no PDT rule, and you can limit your risk. Instead of losing thousands in the beginning and risking thousands at least, you can try this. Your risk is $30 for the base one. You know, the good one, I think, is like $150 or $150,000 in funding one is like $60. So your risk is just super limited depending on what your budget looks like. If you want to check them out, again, a great way to help support the channel. Although, again, remember, they are a sponsor. I'm definitely biased in their favor because they pay me money. And so I'm biased, but if you want to check them out, there's the link. Use promo code BT, Beginner Trading BT, and yeah, check them out. The PDT rule means that you can't day trade a margin account with less than 25 grand in it in stocks. And so if you want to day trade Apple or Amazon or Google or Walmart or whatever it is, without restriction in a margin account, you need $25,000. And they'll say, oh, well, don't use all of it. You know, what new trader has risk management? You're causing a bunch of people to lose 25 grand. It's the dumbest rule ever. Again, trade futures, trade a funded account program and get you around it. Great way to learn how to day trade with less risk and then putting up that money. Yeah, 95%. I mean, most day traders lose. It doesn't matter whether they're on Apex or, TD Ameritrade. Most day traders lose. It's a lot cheaper to go to Apex and lose there, though, than it is to put the money up yourself. Because, again, most day traders lose. Bitcoin going to 80K. Bitcoin is running up a little bit. Again, here's gold. So we got that little short in there. Bitcoin is riding up, though. So Bitcoin up to 66, 65,000 after dipping down to 60,000 this week. Again, what did you guys think? Did you guys like the press conference, dislike the press conference? Do you think it was a good press conference, a bad press conference? We did break 131,000 subscribers, Chad, so thanks so much. We're almost halfway to 132, so I appreciate it. Again, remember, tomorrow we got jobless claims, durable goods. Friday, we got Powell speaking again. Next week, we got GDP and PCE data. Or no, next week. Yeah, next week we got GDP and PCE data. Very busy couple weeks. Gold breaking highs again here, chat. Look at gold up here. Look at gold breaking highs again up to almost 2,200. You can also day trade gold in futures. You can day trade gold, some currencies, the S&P, the NASDAQ, the Dow, the Russell. I think you can trade micro Bitcoin as well. You can day trade a lot of stuff in futures. Again, there's no PDT rule. Just remember, again, you want the max discount, use my promo code BT. BT. You could also use triple B. BBB or BT. Either one of those will work. All right, so again, the E-mini up there again. I want to short this again. I guess I will. We'll try shorting it. Maybe add to it if it bounces up a little bit. You can see it's very similar to day trading stocks. I can buy market, sell market. Super risky. It is power hour. Market closes in like 30 minutes. And again, this is a Rhythmic account. If you want to use the same platform as me, this is a Rhythmic account. Platform called Quant Tower, Quanteower. See if we get some drops. Let's go. There we go. Beautiful drops. All right, we just made another 20 bucks. A little bit more than that here. We'll scalp out of that. Just kind of buying the top or shorting the top up here. So yeah, just kind of shorting the top. See if that holds. Hey, no worries, D. Why buy BT? Beginner trading? You should buy beginner trading. I mean, I don't know how you're going to buy it. You know? I mean, it's just me here. You know? You can't buy me. I mean, you could. You know? I mean, but we're free though. We don't cost anything. Subscribe. We don't sell a course. We don't sell our own service. We don't claim to be an expert. We don't act like a guru. We don't charge for anything. We give people free economic reports, data, stock earnings. We stream all the major press conferences, earnings, full earnings calls, CPI, PPI, jobless claims, retail sales. We explain economics and stocks and markets and futures to everybody while we do it. Everything's free. It doesn't cost anything. No paywalls here. We do have sponsors, of course, and we're biased in their favor, like we always tell people. I think we're probably the only people that tell you directly, yo, we're biased. They pay me money, you know? Like, what a plug, you know? You're welcome, guys. Listen, just... Yeah, I'm in gold right now. I've been in gold for a long time now. I'm up really nicely on the day in equities, too. I took a little piece off of Tesla. I'm in Tesla right now. I've been in it. Took a little bit more off just to lock in some profit here. We're up a lot today. What happened to the market? The FOMC meeting did. You need margin to trade futures. It can be done with cash. I'm pretty sure you need margin, but there's no margin restrict. Like, you don't need a certain amount of equity in a margin account to be able to day trade stocks. Not that I know of, at least. And again, I would try a funded account program. It limits your risk. If you've never traded before, the base one on Apex, again, is like $25, $30 if you use my link, right? So again, if you want the same account, like this right side is Quant Tower. If you want that one, you want a Rhythmic account. So make sure you use a Rhythmic account. But again, you can get accounts from 25K all the way up to 300K. You can get static, so there's no trailing drawdown. And again, it's just a cheap test of skill. If you lose, it's not the end of the world. And again, but that's useful because instead of risking thousands when you're learning something or risking thousands when you're trying to test your skill, you can instead have a very limited risk here. And again, for the time being, it's 80% off in a one-day pass too. So you can get funded in one day. You sign up, you pass it, you hit the profit target, you get funded same day. You know, you'll have your account login, you know, usually within an hour or two, and you can use it that day or the next day if it's late. But yeah, I appreciate the donation, X. Thanks so much, man. All right, so we are moving up some here. Yeah, for news trading, I mean, traders may trade their normal trading system during news times, entering on standard entry rules they use each day. Then they can't go long or short in separate accounts during news. It applies to a bunch of other stuff as well. So I mean, you can trade news. It just has to be your normal strategies. You can do whatever you want in an evaluation account, but on your PA, it has to be like it just has to be your normal strategies. You basically can't go super big, trying to just ride the wave of a news report. Essentially, is what they're saying here. But just check the site. Go to the link I put out if you want and check the site. No, we're not going to cover MU earnings. I don't know. I got out of Boeing a few days ago, and oh man, it looks like it was a bad move. They ended up flipping. ripping up here. I mean, no, it was still a good move. I was in at like over 200, so I got out. It was a good move there. Still in BABA too. How's BABA doing? BABA's doing pretty good. You know, very good day for me. Markets are still breaking highs. Again, that's from my understanding, Jane. I would reach out to them though. You know. Yeah, I don't know what that is, Radical. Is that a real YouTube trophy? Can you show it up close? See, my door got my finger, bro. Don't judge my finger. But yeah, it just says beginner trading for passing 100,000 subscribers on YouTube. I also got like a letter from the CEO, which is pretty cool, I guess. I don't know if it was like a real letter. I'm guessing it wasn't, but it's pretty cool. I'll take it. I can actually order another one. So like once you hit the milestone requirements, you can order a couple of them if you want. Like I can go order another one and they'll send me another one. And I actually might do that. But yeah. It's an award. I won it. It's an award. You know. It's a lamp, you nincompoop, but it's a major award. I won it. Don't judge me. Anyways, Apple's still ripping up. Apple consolidating after breaking highs. I gotta imagine we're gonna start pulling back though, right? I'm gonna short this again. I've been short the top. We're gonna see if we can scale in here. Catch a breakdown, but man, market's just churning up. I just think we're too extended on the upside. But again, we did just have the Fed meeting, so who knows? Flat here on this one. Congrats on your 100K. I remember when you had 2,000. Hey, thanks, man. Appreciate the love. Thanks so much. Yeah, we started off, you know, again, I got started with this channel. Like, I started this channel because so many other people were just being gurus. They were like, yo, I'm the greatest ever, you know. And so I started trolling people, telling people I'm top 3 greatest of all time at everything anybody ever mentions, which is where the top 3 comes from. People don't understand where that came from. It came from there's so many day trading gurus out there. Instead of telling people I was the number 1, I just told them I was the number 3, you know. Made it a little more obscure. But yeah, I mean, again, my job, like, I don't sell a course. Like, I don't claim to even be a good trader. And, you know, we just kind of have fun here and not worry so much. Like, it's hard. Like, trading's hard under too much pressure. Like, if you quit your job trying to day trade, you're probably going to be even more distraught afterwards. Like, it's the worst thing you could ever do. You should never get a loan for day trading either or anything like that. Are we going to take a little bit off here? Take a little bit more off there, scalping this. But yeah, my job is just to give people a resource and community where it's easy. You know, you can learn about economics. You know, we're mostly an economic release channel. We day trade and stuff, but we mostly cover economics. That's where we get a lot of people, you know. Top 3 economists in the world right now. All right, so we're gonna cut that too. All right, we're doing okay, you know. I used to watch this channel way back in the day. You day traded small penny stocks. I did, man. I got my butt kicked in penny stocks too. It's so hard to make money in penny stocks, bro. And the marketing out there in penny stocks. Like, everybody has the secret to financial freedom, you know. It's selling a course, you know. guy just rescued the dog. All right, chat. I'm using Quant Tower, so I'm using a Rhythmic account with Quant Tower. Powell's speech is over. He's done. I lost a lot of money with penny stocks. Is that dude warrior trading for real? Listen, I'm not talking bad about anybody, and I would never mention anybody specifically. Okay, so I'm not going to mention anybody's name specifically or like attack anybody. All right, I would never mention them specifically. Okay. All right, like that's number one. Okay. What I will say is that there's some penny stock day trading gurus, okay, that mislead people. All right, and the way they do it is very sneaky. So like they target low float penny stocks, right? And these are low float, meaning if a whale comes in and buys up a bunch of shares, or if you have a large following and everybody in that following buys a specific stock at one point in time, you can artificially inflate that stock's price because there's not that many shares. You know, you got 1 million, 2 million, 3 million shares. That's a pretty small amount of shares. It's manipulatable. And so some of these gurus with big chat rooms come through and they say, hey, everybody, I'm buying ABC penny stock. And say it's a low float stock. That penny stock, they might actually buy it 30 minutes before they told everybody. And they front load into like 50,000 shares and then announce to their huge following, yo, everybody, I just bought this crappy penny stock, you know, pumping the price of the stock up 25%. And then they unload on everybody. And they don't tell everybody they sell. They tell everybody 10 minutes after they've exited their last position. And they leave all the file, and then they say they make 20K from manipulating the stock that way. Then they snapshot that 20K in profit and they post it online and they say, hey guys, look at how much money I'm making day trading penny stocks. Look at how good I am at day trading penny stocks. Buy my trading course, guys, on penny stocks. But you're not going to be able to do that because you don't have a huge following to pump up low float stocks with, you know? And so I'm not going to mention names, but that happens. You know, but that happens. Again, I'm not mentioning names. That certainly happens. You saw like Atlas, you know, do this. You saw like Atlas Trading do this shit. And so it happens for sure. And you just got to be careful and be smart and, you know, not fall for that. Are we a positive with Powell? The market's up from Powell's speech. Powell was more dovish than anticipated because he was less fearing of inflation, more likely to cut rates. He seemed like he's very stern about cutting rates. I did quit my job. Yeah, you should never quit your job to trade. Not unless you've got a huge sample size and you're really making money. You go to trading, wow, you had 5,000 people watching at the height. Yeah, all we got to do is find a low float penny stock now, right? No, I'm just joking. I would never. You know, I would never. People ask me all the time. They say, yo, John, what do you think this stock is going to do? I always tell them I have no idea. You know, I don't know what Powell's going to say. I don't know what stocks are going to do. Not an investment professional. I'm not liable if you lose. You know, remember, I am terrible at this stuff. I have no idea what I'm talking about. Do not copy me. I'm not an investment professional. Everything kind of looks to be in like a flag-like pattern. No, but yeah. Yeah, dude, there's just it's the marketing. It's the marketing that's out there, David. Everybody's a financial guru with hot stock picks that can give you financial freedom. Most of it's nonsense. You know, the biggest edge in markets is long-term value investing. You know, there's good day traders. You can day trade, but most day traders lose as well. That's why I always tell people to try funded account programs because it limits your risk. It makes it a lot cheaper if you lose, and then you can figure out how much you suck at it with less risk. And then instead of putting up thousands of dollars and losing that, you can lose $30 instead, and your risk is limited. And I think that's useful, you know. But again, like I said, they're a sponsor of mine. I'm biased. I always tell people. You could see it from that point of view. I wouldn't say it was dovish since he was quite hawkish about cutting rates. I mean, I don't know. I think he got questions regarding labor, and they said basically if the labor market and the jobs market shows really, gets really strong this year, does that change their tune about cutting rates? And he said, no, we're still going to cut rates, basically. I think that's a very dovish sign. You know, personally, if it was me and the labor market was hella strong and, you know, the job market was running and we had inflation problems, I wouldn't cut rates. You know, I'd wait, I'd pause. I'd continue pausing until at least July plus. And so I thought that was certainly more dovish than, I didn't agree with that answer, but it was certainly dovish. You know, dovish meaning less inflation fearing, more likely to cut. So, I mean, I don't know. I thought it was pretty dovish talk. The market thought it was pretty dovish talk. It ripped up on it. You know, optimism was there for sure. It just depends which one. Radical said I just signed up for Apex. Is there a step-by-step PDF somewhere there? I'm sure there is. It just depends on which one you used. Eventually you'll get your email and login stuff. The headquarters is the site though. So you sign into the site and you sign into the site and you go to your dashboard and it'll give you what you're like. You look on the right side, it'll show you your Rhythmic or your Tradeovate login on the right side of the member site. And that'll give you your login stuff. If you got Rhythmic, you can download Quant Tower or whatever platform, MetaTrader 4 or whatever, or Ninja Trader I think they use. I'm not a big fan of Ninja Trader. I like Quant Tower and Rhythmic. But Tradeovate's a web-based platform, so you just log in with your password on the website. So. How long is the one-day pass for? I mean, I'm not sure. I think it's got like a week left. 25K Rhythmic with Ninja Trader. Yeah, well, with Rhythmic you can use whatever. You don't have to use Ninja. You can use Quant Tower. If you like my platform, you can download Quant Tower and use it. This is Quant Tower here. It's a little bit more complex to set up, but I like the platform much more than Rhythmic. Rhythmic is kind of old school. The data managing section is pretty dope on Rhythmic though, but it's just different. Will you stream MU earnings? Nah, probably not. When do they drop? What time do they come out? Nah, it's too long. I'll probably cut the stream before then. We'll see what happens though. They have Chewy, MU, and a couple other ones. Turning a large YouTube channel into a pump and dump group is a good way to exit, retire. With a big payout, it sucks. Yeah, I feel you, but it's not worth it for me. Look, I always tell people the same thing. If I wanted to be a day trading guru out here renting Lambos and you know, overstating my ability and telling people I'm more wealthy than I am. Like, listen, I got a really nice house. I'm not trying to brag. Like, my house is nice. I got a freaking library. If I wanted to make a bunch of marketing from this house that I'm in and use it to try to look like some hella successful day trading guru to sell you guys a course, I could do so, and I could probably make millions from it, pretending to be like an expert day trader that's living off of my day trading profits and all this stuff. Like, I could certainly make millions from that, but like, I would feel terrible about it. You know, I'd like to sleep good at night. And again, I can still make money. I'm in this to make money. I'm not lying about being in this to make money. I would rather just tell people I'm terrible at everything. Don't sue me, don't copy me, and still make money on the back end, but sleep good, because I'm being honest about it. You know, I'm telling people the truth. That's more suited for me than being a day trading guru out here slanging courses, you know, for $5,000 a piece. It just, I don't know. It's just not me. Not what I want to do. You know, I'm more economics anyway. Like, I'm more into, I think people who watch the channel understand I'm more into the economy and markets and investing and PE ratios and CPI data and earnings and stuff like that than I am into like day trading. You know, I still day trade every day, and I love day trading, but yeah. And I'd rather just be real about it. I'm still friendly with Top Step, so they're cool. I mean, you know. 3D printing? Yeah, but the problem with 3D printers is it's so hard to monetize. Like, I thought about getting Pawn has one, a 3D printer. It's so hard to monetize that. Yeah, Rhythmic is Quant Tower. So with Quant Tower, you can log into your Rhythmic account, and that's what I do. So you use your Rhythmic login on Quant Tower to log in. That's what I do. when will we see interest rate increase? I don't think rates are going to go up for a long. I mean, not in. Yeah, rates aren't going to go up. They're going to go down most likely. I mean, interest rates might individually rise, like because even a rate cut is a lagging thing. It's going to take time to affect like mortgages or car notes or car financing and stuff like that rates. But right now the Fed they've been in a period of tightening. They're slowing down their QT. They're slowing down the reducing of their balance sheet. And again, eventually, probably mid to late this year, they're going to begin cutting rates, and they're going to pivot from pausing the federal funds rate to reducing the federal funds rate. What that's going to eventually do is trickle into interest rates around, and that's going to lower interest rates to consumers over time. But we don't know when they're going to do that. They're currently in a period of pausing, so leaving interest rates on their end unchanged is what it is. Do you think some Photoshop their order screenshots? Yeah, of course. I mean, I don't. Like, but I'm sure some people do. Of course they do. And again, a lot of people don't like me because, And again, I'm in this to make money. I try to make my intentions very clear. You got some people that are like, "Yo, I'm in here out of the kindness of my heart." Millionaire students. I just like helping people. It's like, get the F out of here, bro. No, you don't. Like, you're here just like we all are. They're trying to make money, and that's okay. It's okay to want to make money. I mean, that's what this is. But Mr. Beat's doing it to make money, 100%. And that's all right. Yeah, they're not gonna try to. They might cut rates. They're not gonna raise them. What are you referring to as it, Tracy? What do you mean it? You talking about the federal funds rate? They're not gonna raise it up anymore. Not anytime soon. I mean, eventually they will, but right now they're not. Look, here's the graph, and I don't think this includes today. Hold on. Look, here's the federal funds rate graph. All right. Here's the last year. Okay, they've been pausing interest rates since August. This is not going to go up anytime soon. The question is, when do they start cutting rates? And again, Powell said the base case for rate cuts is going to be sometime this year. They're not going to raise this anymore. Again, I'll give you the cycle of economics and Fed, like, over the last 5 years. Here's 2020. The economy was at risk. They brought interest rates down to almost zero to encourage spending. They did QE. They did stimulus checks. All of the consequences of all these things, the QE, the stimulus checks, the money printing, the buying up a bunch of bonds, expanding their balance sheet. The consequence was low interest rates, and then that allowed people to spend more, and people did spend more, and this spiked inflation, right? Inflation spiked, got up to almost 9% in 2022. And so then the Fed pivoted to a more tightening stance, a quantitative tightening stance, and they started raising, rate hiking the federal funds rate. They started raising interest rates. Recently, they stopped last year, and so they've been pausing. And again, the question is not when they're going to raise again. The question is when they are going to cut. And it's supposed to be sometime this year is when they're going to start cutting rates. This is the federal funds rate graph. And again, the federal funds rate is just the interest rate that banks charge each other to hold money overnight. Eventually that trickles into everything else, though, but it takes time. But eventually that trickles into everything else. So eventually this decision will trickle into mortgage payments and financing and lending and so forth and so on. And ultimately, like, reducing the federal funds rate helps banks lend more and reduce interest rates for consumers. When banks lend more, they're more competitive. It reduces interest rates. You're just being real. Some people are always green. Like, really? You're a 99% win rate? Come on. Yeah, I feel you, man. Listen. And again, from somebody that's been around the market for almost a decade, it's super obvious to me, Like again, you got people, like, the younger generation is the worst with it. You look at freaking TikTok, bro. Everybody's a freaking market expert. They're talking about, yeah, if you just earn 5% a day, you could be rich in a year. Oh, really? 5% a day, that's it? Just 5%? Like the elite of the elite earn 30% in a year. You're trying to tell me all I got to do is earn 5% a day just to get rich? Wow, man. Shocking, you know? Again, you earn 5% a day. Goldman Sachs will pay you $1 billion if you have that system that can consistently earn 5% a day. They're going to pay you a billy, you know, just call them up, you know? It's just funny, man. The younger generation just doesn't understand. I wish it was like that. I wish you could, you know. How does this set up tomorrow's trading? A lot less gloomy, a lot more bullish in markets right now. Everything's up. I don't know if it's going to hold, of course, but it's a lot more bullish in markets. Anyways, I'm going to go ahead and probably close it down. Again, if you want to check out Apex Funded Account Program, they're a sponsor. I'm biased. They pay me money, but it really is a great option. Do not put up thousands of dollars yourself trying to day trade stocks. You're probably going to lose that money. I don't care what your guru tells you, what course says, financial freedom nonsense. Most day traders lose money, and you should limit that risk instead of putting up thousands of dollars yourself. Limit that risk with the funded account program. If you lose, you're only out what you pay for it. The base one on Apex is one of the most legit ones in the world. They paid out over $100 million, and the base one is only $30 if you use my link and promo code BT. They're going to give you a demo with that. If you hit the profit target on the demo without hitting the max loss and follow their rules, they fund you the same amount. The base one, you get $25K in funding. There's ones up to $300K, and again, you got a 90% split, and you get to keep your first $25K in profit afterwards. But again, most day traders lose. You'll probably lose this as well, but it's a lot cheaper to lose this than to put up thousands of dollars and lose that in markets. So if you want to check it out, again, they are a sponsor. I'll put this link up. Use promo code BT, beginner trading BT. Again, though, remember, they are a sponsor of mine. The other sponsor I have is a company called Chart Prime. It's a trading view indicator service you can use in stocks, crypto, forex, futures. It's really useful as well. Again, I was always skeptical of these of these programs and softwares, but some of these are really solid. Again, you can set alerts for these as well, which is really useful because like you could set alerts and you can set like a text message alert on your phone, and it'll send you a text message when the alerts show up. I always try to back test it live without really looking at it so people can kind of see how genuinely impressive this can be. Again, let's back test this so far. So again, these show up. They show up about a candle afterwards. So this shows up here, right? But you look at the beautiful breakdown. This is a 5-minute chart. This is hours of breakdown afterwards. Look at the strong signal. You did get a follow through. This one was probably wrong. This one, look at the beautiful bounce, sell signal, beautiful drop, strong buy signal. Look at that follow through, hours of good action. Look at the sell signal here, beautiful drop. Look at the strong signal here, beautiful bounce. And so again, that's only one that didn't work that I can see here out of 1, 2, 3, 4, 5, 6, 7, 8. So 1 out of 8, that's impressive. Again, I can't guarantee you're gonna make money with this either. Nobody can. But again, just genuinely impressive. Back test it yourself. There's a lot of stuff. Any time frame, I can use it on an hourly time frame. And it's gonna work or not work on different time frames. So I can't like guarantee it's gonna work or it's not gonna work on any time frame or anything. But again, test it out. Pretty impressive, I think. Look, these are hourly charts. Hours of breakdown, hours of bounce, hours of breakdown, so forth and so on. So back test it yourself. This one's called the Market Oracle. But again, you can also use back testers, oscillators, screeners. It's like $40 a month on anything with a symbol on TradingView. You do have to have a premium setup for TradingView though. But yeah, it's called Chart Prime. You can use my promo code here, BTRADE, BTRADE. You get 40% off. Check it out. Again, though, they're sponsors. I'm biased. You know, be careful. They're sponsors of mine. I'm biased. You can check out the link for both of these in the description. I love you all. Y'all be safe. Again, guys, remember, tomorrow we have jobless claims and durable good orders, I think. So tomorrow we have jobless claims, durable good orders. Friday, we got Powell speaking again. So Powell speaking again on Friday. So yeah, y'all get ready. Powell speaking again. I think we have durable good orders, jobless claims, and a bunch of other stuff too. So yeah, y'all be safe. Again, I can't guarantee you're gonna make money with anything. So, you know, I'll see you guys later. Y'all be safe. Good luck. We'll see you guys bright and early tomorrow morning, guys. Jobless claims numbers tomorrow morning. I'll see you guys then. I think Powell is doing the introduction to something Friday. I'll have to check, but we're gonna stream it live. Hit the subscribe button. I'll see you guys then.